Also, yes.
Yeah, when you click the off button for your remote desktop, now you actually have to physically give permission for anybody to remote in. With that on, if they can hack the
I never
system,
turned it on, so I don't.
yeah, with it on, if somebody can actually get into
Yeah, it looked like
into
somebody
that,
had been
then
on
they
my
can
computer.
hack into your machine.
Yeah, because I've sat here with corporate
Mhm.
when they've been on my computer, and I know that you have to do the permission through whatever.
Splash top.
Yeah, and I had that on my computer.
Right.
All of
And-
ours did.
right. And so, I mean, I've done that, but I came in one day and it looked like that. It looked like somebody had been
Clicking
on my
it.
laptop.
Clicking around.
I mean,
on
on my.
yeah.
That's George.
That's
It
George.
might have been George because he was playing with my toys yesterday.
One of them I couldn't
There was one morning I came in. I closed the night before. Okay. And this jack right here actually sat right here. It was over there in the toy section when I came in the next morning. There had been no kids the night before. It was right there when I left. Our office is
You need to quit coming in at midnight and moving stuff.
Yeah, I'm making a special trip just for that. Just to mess with her. All right, property transactions. We're going to talk about Schedule D, Forms 89, 49, and 4797. Chapter 14
Yes.
of 20.
Almost done.
Almost done. Getting real close.
3 more weeks. No, 2 more weeks, didn't it?
2 more weeks because I accelerate the last week.
Yeah. The last week we did. The first week we do 2 chapters each day. The last week we do 2 chapters each day.
Right.
Woohoo.
I can't take a vacation on the following Wednesday.
You take a vacation on the Wednesday before Thanksgiving.
That's what I'm talking about.
Okay, good.
It's my birthday.
The day before Thanksgiving.
The Wednesday before Thanksgiving.
What
Oh,
day?
wait a minute. I'm calling Linda. I'm making Linda work, damn it.
What day is yours?
The 19th.
Wednesday.
His wife's is the 19th, too.
I'll turn 60.
You
before
suck,
all of
dude.
it.
I'll open
Always
the office
1 year.
until 1 and then we'll close at 1.
That point, why you didn't
She
hire
did.
me?
She didn't catch it.
I'll come in the morning.
Well, I probably need
I
to
still
pick.
gotta do coffee run.
I probably have to pick something up for dinner, so
Oh, yeah.
Yeah.
I need to give myself that option that I can go someplace, whether. No, it's lasagna, but
Oh.
just what am I gonna do about like sometimes
Sweet Italian sausage.
I do special or homemade dressing for the salad.
Ooh. I don't know if you have one, but Karen had us get one of those vegetable wheel
Yeah.
skinner thingies, and just out of curiosity, because we like lasagna, I made lasagna using zucchini done out in sheets for the noodles.
But that would work.
It does. It is really good.
I love zucchini.
It is really good. I don't remember what the name of it, the Vasta or something like that. You put your
And I'm pissed at you. Where's my recipe, dude?
No, I'm not doing that. I'm gonna say it just like if it was
I get
my
home
wife.
and forgot.
You remind me when I'm here. Is the
Remind-
recipe here?
No, I know.
Remind me when I'm home.
I try not to.
8:30 tonight. Give him a call and say, "Hey, bring my recipe."
No, she just wants a picture of it.
I just need a picture.
Okay.
I can print it off.
But yeah, I've made lasagna with that Vasta machine where I've created zucchini sheets and then just put the zucchini in there
Yeah.
for the instead of the noodles, and my lasagna mix in between the sheets, and baked it. Comes out real good.
All right. So for this chapter, we're going to talk a lot about basis. We're going to talk about long-term and short-term capital gains and losses and how to report them. Take a look at Form 1099-B. Review 1099-S. We've already seen it once.
1099S.
Yeah, it was back like in chapter 5.
Oh, when they went over the 1099s, or
Well, no, when we talked about some of the stock sale.
oh, okay.
Although today we're really going to focus on that because we actually are talking about 1099Bs.
Yeah.
Schedule D in 8949, which actually is kind of the opposite. Use an 8949 to populate Schedule D.
Yes.
Capital losses, sales of stock, sales of your home, ordinary gains and losses, depreciation recaptures, and Form 4797, the sale of business property. We want to learn more about basis of property and how to figure it. We want to understand better the short-term and long-term capital gains. We want to explain how to report the sales of stocks, how to report the sale of your main house, calculate ordinary gains and losses, calculate depreciation recapture. Now the IRS, of course, has rules for figuring out gains or loss, as well as taxing the resulting income, limiting qualified losses. They don't like it when you take big, huge capital losses. So we're going to cap it. For example, you sell your barbecue grill for $900. Is that considered income? And will you be taxed on it? Well, right now the answer is I have no idea.
I do. The answer is no. It's personal
it's personal
property, and you don't
property,
get.
Well, but technically, if I sold it at a capital gain, I'm responsible for paying the tax. Nobody's ever going to do that.
No.
But theoretically, that exists. Yeah, sure. If I had a $900 barbecue grill and sold it for $100, can I write off any of it? No. Unless I was in business and needed the barbecue grill. But if I'm a personal person and I just have my $900 barbecue grill and I sell it for $1,000, technically I have a $100 capital gain that I need to report.
I have a curiosity question. Okay, so I'm 18 years old in 1969, and I buy 1969 Mustang.
Yeah.
It's now 2025. I've kept this car its entire life. I've kept it up real good. It's been maintained in pristine condition. And I turn around and sell it. Now, in 1969, I bought that car for $8,000.
I know where you're going with
This year, I can sell it for $80,000. Do I pay capital gains tax rates on that, or do I pay collector's gains tax rate on that? Is it considered a collectible, or do I just pay a capital gains tax rate on it?
And the year of it.
See, when they're talking about collectibles, they're really talking. I mean, I get the
Stamps,
argument.
Coins.
I'm just one, and I have a valid reason for this, because my brother buys, restores old cars. I mean, he's got a '67.
But it's different. What you're describing and what you started with are two different scenarios because he's changing his basis.
Yeah, but if he only
As
has
he
one,
restores
he's not a
it-
collector.
as he restores it,
Right.
he's increasing his basis.
Right.
So that's a different question.
Okay.
Taking my vintage that I bought back in 1969, and it's still in a point that, low mileage, no rust, original paint,
Original engine, original
engine,
everything,
no.
matching number, all that good. Yeah.
matching numbers, the interior is pristine.
My motorcycle's all that.
I would still not lean toward collectible, although I see the argument. I would still lean toward it because a car's a car.
Well, that he only has one. He's not collecting.
Well, and that's another case for saying that it's not a collectible. But is it just is the fact that I only have one Babe Ruth baseball card from his rookie year, and that's all I've got is that card? Does that mean it's not a collectible?
You're a novice.
Well, I'm a novice, but it's still a collectible.
So in my scenario, if I sold that car to you for $80,000, as opposed to putting it in Meacham Auto Auction
Foul.
to have them sell it, or Barrett Jackson Auto Auction to have them sell it, would that alter the argument for whether or not it's a collectible?
No, because it's still a car.
Okay.
I mean, at that point, the car's a car.
Okay.
I see the argument. I understand the argument. But
But
I
if
don't want it to be a collectible. That's an automatic 28%.
Right. That's why I'm asking, because I mean, and to expound on it, if I bought that '69 Mustang in 2020 for $8,000, and I put $40,000 into restoring it, and now in 2025 it's worth $80,000, and I turn around and sell it, is it still just a car, or is it a collectible at that point?
It can't be a collectible because when you originally purchased it, that wasn't your intent.
Okay. Okay. So it would still just be a capital gain
Yes.
at capital gains tax
Tax
rate.
rate for that particular item. Because, like I said, when I bought it, it was no intention. I had no idea it would be a classic. I don't know, but that's not the point. I bought a car. I need to get from A to B.
Right. But if I bought that same 1969 car in 2020 and
If you're Jay
restored it,
Leno,
if I'm Jay Leno and I've got 500 of them, it's a collectible.
right, that changes the whole thing because he has a collection.
But if I'm Jeff Hulse with 3 or 4 classic cars that I have purchased and restored,
That's a whole different scenario again because my capital gain isn't going to be as big because I'm going to have more in the basis. Sure, it was a rusted out Heat when I got it, and I got it for $500, and I'm going to sell for $80. But how much money did I put into it, which is going to change all my bases?
I'm asking for a reason because at Christmas my brother said he needed to talk to me about his cars, and I'm figuring this is where we're going with it.
Oh, before I go on this, I wanted to point out I listened to a CPA Academy webinar yesterday,
Uh-huh.
and well, you already know. I already told you.
But I can't hear with him talking in my ear.
It was about OB3, and which, by the way, they're changing the name of that. They're no longer going to call it the One Big Beautiful Bill.
It's the
IRS
Workings Family Tax Code.
Yeah, that's what they're changing to. That wasn't where I was getting to. One of the guys was talking to an IRS agent, and 2 things were coming out of that discussion they had with it. Nobody's training new phone reps. It's not happening right now
New phone reps.
For the IRS.
for the IRS as far as calling on the phone and getting assistance. They're not training anybody.
Oh, so calling and getting assistance is going to be
Hard.
okay.
2, the programmers are working, however, at reduced rates. There is a possibility that tax season won't open on time, but they were more thinking along the lines of it will open on time, but it's going to be a limited rollout.
Kind of like what we've had in the past.
Not
Not
all
all
forms
forms
will
are
be
there.
available at the beginning.
So,
Like that one year when we couldn't do education credits until March.
okay. So this is a rollout for Liberty then?
No,
No.
no.
No,
Across the
from the
board.
IRS. The IRS is saying that
Oh,
we
okay.
might be late in opening, but we don't think so. What will happen probably is that not all forms will be accepted by us because we haven't fixed them yet.
Okay. All right. All right.
Kinda
So,
like, remember when
so
somebody-
we're gonna have a staged rollout because the IRS won't have the updated forms rolled out
They're
when
gonna
they want to open.
Right, they're going to focus on the ones that are important. So EIC, child tax credit, those things. But
And I can't remember which president it was, but there was a president that added stuff in February.
That was Biden. That was the unemployment.
Okay. And then, so we had to wait on all of those people or go back and fix what we had already transmitted.
no, then the IRS decided that they knew what they were going and could fix it themselves.
Right,
No,
yeah.
right.
there's a better case to go back even farther when the IRS wasn't accepting education credits.
Right, and I remember that
That
one
was
too.
even farther back.
That
Yeah.
was Phoenix, wasn't it? When we couldn't, that was that first year that I was here.
Was it? Okay. Well, it was the
Tax year 18?
Well, it was one of those tax years. Remember, I've done a lot of tax years. They all blend together.
Yeah, I know. I'm just thinking.
Just like,
All right. So, basis is the amount of investment in the property for tax purposes. It is the starting
that was
point for
before.
tax
Yeah, before me,
calculations.
yeah.
How much did I pay for it? You can capitalize, add to basis many direct and indirect costs, like we were talking about. I bought the old rusted Model A. I'm going to restore it. So I'm capitalizing it. If the property is used for both business and personal purposes, the basis must be allocated between the two categories by some sort of percentage. Like I could sell my car if I was depreciating it, for instance, and take some of that capital transaction and write it off on my business. And then the other half on personal. I don't recommend it, but it's possible.
Mm-hmm.
Keep accurate records. For property that you purchase, the starting point for basis is usually what you paid for it. Could be what you paid in cash, debt obligations, so with a loan, or in exchange. I traded you this car for that car.
Mm-hmm. Barter.
Yeah. Cost also includes amounts that you paid on sales tax, freight, installation, any excise taxes that you might have paid directly, legal and accounting fees, possibly. That's really kind of a stretch on that one. And real estate taxes, especially if you assume liability for the seller. Bought a house, and part of the contract, because they were behind 5 years of taxes, part of my contract price is catching it up.
You're responsible for the back taxes.
I'm responsible for back taxes, but it's not my tax to pay, so it's just an additional cost.
Is that how a lot of flippers buy their homes to flip? Is go in and pay the back and then they take them?
Well, but they're also buying it. I mean, there's an aspect to it that you just can't go and say, oh, okay, you're behind 5 years. I'm gonna just pay all the taxes now. It's mine. It's not that sad.
I've heard that it's happened.
Typically, what happens with that is I get behind on my property taxes 5 years. Sedgwick County comes in, kicks me out of the house, and takes my house. You turn around and come in, and because Sedgwick County is not in the business of real estate, you come in and say, look, Matt owed $7,000 in back taxes. I'll pay the back taxes. You pay Sedgwick County the $7,000 for the back taxes. You've just bought my house for $7,000 from Sedgwick County.
Yeah, but the county is the one who actually kicked you out.
Right.
Not,
The
not
county's the
flipper.
one that took the house from
Right.
me because of the
Is
back
that how they're
taxes.
acquiring
I don't know. I'm not
a
in
lot
that
of
business.
homes
I
like
don't-
that nowadays?
But if the bank's involved in it, too,
Yeah, if,
like that, you'll end up having to pay what's left over on the house.
Yeah. Yeah, see, if I'm behind on my taxes and I'm still making a mortgage payment, that's a breach of contract with my lien holder.
Yep.
And it's not so much Sedgwick County kicking me out,
That
it's
trumps-
my lien holder coming in and foreclosing on the property.
And that trumps Sedgwick County.
Then what they do is they take that $7,000 that I owe Sedgwick County, add it to what I owe left on my mortgage, and then if you want to come in and buy my house, you have to pay what the balance of the mortgage or what the
New
bank is
basis.
selling it for from the bank. The only time you would buy it just for the sole back taxes on it would be if I owned the house and got behind on my back taxes.
And then it becomes yours.
And then it would become yours for the cost of the back taxes. But that would be because Sedgwick County came in and took over my home because I am behind on my taxes. The bank doesn't have a lien on my home at that point. If the bank had a lien on my home, then it's the bank that would foreclose on me because of the back taxes. The bank would pay Sedgwick County, add that to the mortgage, and then turn around and try to sell the house. Because the bank's not in the real estate business either.
They just want to get with those.
Yeah, typically, as long as they get at least what was owed on the mortgage.
Know about that.
Yeah.
If you sell mutual fund shares that you bought at different times and prices and have kept in a custodial account, you may choose to calculate your basis based on average cost per share. However you want to arrive at it. Most likely you're going to have a 1099-B at this point. And breaking it down, so.
Unless you have AT&T stock from 1982.
Or mutual fund stocks going back that far, you know.
Yeah.
Let's not spill the beans on that one, man. Real property, also called real estate, includes land generally built or grown attached to the land. When purchase real property, certain fees and other expenses are part of the basis. That would include settlement fees, closing costs paid for buying the property, as well as any real estate taxes that you agreed to pay for the seller. Just all those taxi things. If you purchase points, that's not basis.
So if I was going to buy 1,000 acres of land, and part of my condition of buying the land is having a geological survey done, because I know what I want to do with the land. Can I include the fees for that geological survey into the basis of the land?
If you do it within a reasonable amount of time, relative to the purchase.
Well, that's what I mean. Is I'm interested in this 1,000 acres, but I want a geological survey done first.
Yeah.
And if the geological survey pans out, I will buy the land.
Yes.
Then I could add the cost of that geological survey to the land, to the
Yes.
basis of the land.
Yes, you could. Because, you know, the survey is one thing. Let's take the word geological out of it. I just had a property line survey. I ain't doing that for free.
Right, right.
Same idea.
So with the geological word, you were looking for minerals and.
Yeah, yeah.
Most likely, yeah.
I guarantee you, I'm going to say this outright. The person that owned it before you probably didn't let the mineral rights go with the property.
Yeah.
Because they already know.
But he's talking about a property that's
Yeah,
never been geologically checked.
Yeah, I'm not buying my 1,000 acres from Shannon. There's 1,000 acres out for sale, and I'm thinking about buying it, but because I know in that area,
Well, yeah.
oil and gas
Yeah.
could be there if I had a geological survey done as a condition of purchasing the property. If I could add that cost to
But I'm just saying, anybody that's owned that property before you
right,
has already done it.
right.
You think.
Oh,
No.
Most likely.
If you purchase property using your business or as income producing property, the basis starts with your actual costs. And then whatever else that you need to add to it, you add to it. Bob is an independent contractor, files Schedule C for his business. He purchased a building where he stores his construction equipment and supplies. His basis is the building his basis in the building is what he paid for it, plus any other costs, including, commission to the broker, the real estate agent. Again, that's why I want to see that big settlement sheet.
Right.
I'm nosy.
No, well, not necessarily nosy. We're just trying to make sure that we get the best outcome for our client.
Right. Adjust it. Over the time of the ownership of your property, certain events may occur that increase or decrease. The result of these adjustments to basis is called your adjusted basis. For example, adding a bedroom to a house is an improvement. It increases your basis. Might increase your basement, depends where you put the addition to the house. But that costs money.
Yeah, well,
Even if I did it myself, it still costs money. I just can't put my labor in.
you don't get to add it when you sell it for residential real estate property. You can take a 2-bedroom, 1-bathroom house, make it a 5-bedroom, 3-bathroom house, increase the value of it by $150,000. But if you only paid $50,000 for it, that's your basis when you go to sell it, minus your depreciation.
Add the cost of improvements to the basis of the property if you increase the value of the property, lengthen its life, or adapt it to different use. I will say that if it's different use, that's in a positive manner. Let's face it. If I take Shannon's example, the lady who converted the house in Augusta to a greenhouse,
Yeah.
that's not positive. She converted its use, yes, it's now technically kind of commercial, but there's no way that the wood floors over time are going to hold up to her watering plants on top of it.
True. But if she took that same house and turned it into an insurance agency, then it's a positive.
That's a positive change. At least what I'm doing is not necessarily decreasing the value of it. Every time she
Right.
waters the plants in that house, unless she went through and tiled everything and there's
Yeah,
no
the
cracks
moisture
anywhere.
from
I was
the
gonna say,
plants
yeah, you're
in
adding
gardens
moisture.
is-
Yeah. She'd have to have one hell of a
Sheetrock, we have blood
dehumidifier in
Yeah.
There
there.
again, how do you get around from commercial to residential?
Well,
You have to
in her
have
case,
it.
she was on the sly. She didn't tell us anyway.
Yeah.
But then again, the insurance and everything.
My yard.
She probably didn't tell the insurance company what she was doing there either.
Well, and a lot of it, I mean,
I don't think she did.
for some stuff, like taking a house and turning a home, a 2-bedroom, 1-bathroom home into a real estate agency, because you're not really doing anything outside of what that structure was intended for, there's probably not going to be much of a zoning issue.
No.
But if I take that same home
Make a dojo out of it.
and I turn it in and I turn it into a greenhouse, or a bakery or something like that, a commercial bakery, and I start adding stuff onto it, now we might have a zoning issue.
I'm talking about that farmer's insurance company that's down here, out of that home down there. It's got
Right on the
stuff all
corner.
around it.
Right, but that's
But that's not really That's not really causing a problem.
right.
What the problem is going to be, where people would actually start throwing a hissy fit about it, is like,
As if
okay,
you did it in our neighborhood.
well,
Yeah.
that, or, if I opened up a bakery in the house,
right.
and all of a sudden I've got a fleet of bakery trucks running down the street every day,
At
people
3
are going to
a.m.
bitch.
He's loading bakery trucks from 3 to 5 a.m.
That's your building shop.
He's running a bakery.
Even
Right.
if I'm a
Bring
home
some over
baker.
the house, I turn my head.
Yeah.
All right. So add assessments for improvements such as streets and sidewalks to the basis of the property assessed if you increase the value of the property. Well, I didn't necessarily do that though. But the city did. theoretically, my house on a paved street is more valuable than one on a dirt road.
Yep.
At least in town. So my basis has changed.
Unless you have a dirt street, it does.
That's what I said. And
But
the city
think
of
about it.
Wichita's trying to get rid of those.
Right. Think about
Trying
it.
to pave that.
If the
but
city,
they're wanting to raise our taxes in order to do it.
because it'll,
Which is the top
because
one?
it will ultimately increase the value of every single home down that street.
Because now you're not mudding in the rainy season or out throughout the winter. And
Yeah.
No.
You can get a snow plow down there instead of a grader,
My house.
instead of a land grader to clear snow, if they even clear snow.
I like the trade. City comes in.
a credit or a casualty reimbursement you receive is a decrease in the basis. While the expenses you incurred to replace the damage from a casualty will increase the basis. But I'm offsetting things at this point.
Yeah.
The tornado came out and ripped off my roof. That's a decrease in basis. Because, obviously a roofless house is worth as much as a house with a roof. But then the insurance company comes by and pays me for the roof. Well, that's an adjustment in basis. I was made whole again.
Now my $100,000 home is only worth 75, but I got 25 for it.
And now I'm going to increase my basis because I'm actually going to put on a roof. So theoretically, at the end of the day, it might even be worth more because you got a brand new roof on it.
Right. So I spend $25,000 putting a brand new roof back on the house. Have the appraiser come out and he says, "Oh, brand new roof. Your house is now worth $125,000." So now I've got a
Increased basis.
increased basis of $25,000 over what it was before the.
Right, but I've gone through all these steps. It's not just one thing, it's a number of steps that I had to calculate.
Yeah.
Adjusted cost basis needs to be determined before figuring a gain or a loss on the sale or exchange or disposition of the property. Some examples of improvements. Well, let's face it, there's logical. Let's see if they've updated this list at all, because there's
Not much.
no.
They have miscellaneous.
They're not blocking it out, but the thing that I consider now almost as a detriment is that damn satellite dish.
They have those still.
Yeah, but they don't have that on there that does well. They do have it on there as an improvement. Damn.
They do. I don't think that's an improvement.
No.
I mean, granted, maybe if I lived out in the country, yeah, that's an improvement because I can't get cable or, but I was just thinking when we did live out in the country, we had that big, huge 8-foot C-band satellite dish. That thing is ugly. That's not an improvement.
The John Ritter movie,
Which one?
the one where they had the big, huge satellite dish in the backyard and they got sucked into the satellite world. Him and his wife.
Yeah. I stayed away from that as much as I could anyway. So in 2020, David paid $180 for a beach house to be used for personal purposes. He also paid commissions of 10, title and research and legal fees of 6. He immediately spent $20,000 on remodeling. So his new basis is $210,600.
Yep.
So when he goes to sell it, that's the number that we start from.
He's still missing one.
Well, maybe it was a good market and the seller picked up a lot of them. You don't know. That's why I
Well,
need to see the settlement sheet.
He
Right.
paid a commission of $10,000, so on a $180,000 building, 10,000's what, about 5%,
Yeah.
6%? That'd be about right for a real estate commission.
So when they're talking about when an improvement is made to a unit property, there's usually a related demolition or removal of a portion of the underlying property. Well, let's face it, that's partly true. but it might not be as serious as you think.
Mine is, I've asbestos tiles,
That's an improvement.
but it'll cost more to take them down and dispose of them than the whole property's worth for a mile radius.
Good luck selling that, Joey.
That's the other thing is if you went in and had it removed and had non-asbestos tiles put in, that would actually be considered an improvement and might increase the value of the property.
Well, it would, because right now it's detrimental, because people won't work right on that specific area of my house because of those tiles.
Right.
They don't have clearance for it.
So again, we're talking about some of the adjustments to basis in this crease. We're also looking at decreases. So increases, adding an addition to your home, replacing the roof, the entire one, paving your driveway, putting in air conditioning, rewiring the place, replumbing the place.
Going in and getting rid of all of those
Plastic.
galvanized steel pipes and
Well, I'm not a fan of those plastic things either. I'm so happy to be back in a house that has copper.
oh, the
The city
PVC.
just sent out all those letters about that galvanized piping, because I just got mine.
What are they saying?
Get
I
rid
run
of
the
it.
place.
Yeah.
Or I have to run my water for up to 10 minutes before I drink out of it, or use it to cook. Or
Fortunately, I've got all copper, so
Yeah,
It
my
just
house
sucks
is built
because our, like I
1920.
told you, ours is not in sections, it's just,
decreases insurance or other reimbursement for casualty losses. Deductible casualty loss that wasn't covered by insurance. Matt's favorite, payments received for easement or right-of-way granting.
Oh.
Matt had real fun with this because the state of Oklahoma claimed right-of-way on the client's property and paid them some money because they wanted to expand State Highway 11.
They didn't even say it. They just went in and said, "We're doing this. Here's a check."
And now Matt's got to try and figure out what the basis is.
We didn't do too bad.
No, we didn't. Took us over a week, and it took at least 4 different people looking into it, but we finally figured it out.
Well, wouldn't it be just the cost of the land and then less the value of that?
Well,
But
see,
they didn't do the whole
Take
thing.
over?
but see,
I mean, here's
They
problem number 1 is that they didn't take everything.
Oh,
they took 3 acres. You have 3 owners. They took 3 acres of land off of the total, and they cut a check to each one of them for X amount of dollars. So thinking, okay, I went in and I looked, and I was like, well, at first we got it, and it was like there's no basis on here. So we went into the property or the real estate property tax for Oklahoma to see what they valued at, what they assessed it at, what they appraised it at. Really couldn't find anything there. Okay. So my next step, I asked the client, well, what kind of property is this? Oh, it's just a big field. Okay, so it's just a big field. How much does an acre of non-farmland sell for in Oklahoma? How much does an acre of farmland sell for in Oklahoma? You can take those two and average it. Cool. Shane turns around and says, okay, but it's in this county, and we realize that the county that it's in is a little better than, say,
Beaver County.
Yeah,
so
a
it's
plot
Bel
of,
Air.
kind of. So he looked to see how much an acre of land or an acre of farmland was selling in that county. And we were like, yeah, let's use that. Because for Oklahoma, an acre of land, farmland, was like $2,300 an acre. Well, they got almost $12,000 a piece for their acre of land that they were out. Well, when we looked up to see how much an acre of land in that county was selling for, it was like $9,500 for an acre of land in that county. We're like, yeah, we'll use that one.
Yeah, because let's face it. I mean, they arrived at a reasonable number that nobody was going to argue with. It's just that I happen to think, well, this was in a not necessarily Bel Air type condition, but
Yeah.
you got the right idea. It's just in a better part of the state. It was less arid, more, because think of the closer you get to Arkansas, the more.
Lumpy rocks.
Well, but no, that's farther south. It's more trees, more luscious, more
More desirable.
desirable than if I was talking about the same land in the Panhandle,
Yeah.
where it's all just basically blowing sand and tumbleweeds.
Yeah. That was fun.
So
Well,
sometimes it
feels
takes a
like that.
while because we have no idea. Like I said, it's not. Sometimes your problem just can't be solved in a day.
Yeah. Then you do a little research.
Sometimes you need to talk to some other people and get some ideas. So I know I was involved, Matt was involved. Was it Shannon involved or was it Brenda?
I think it was Brenda.
I think it was Brenda. In the sale of the Oklahoma property.
I think it was Brenda because I started looking into
Yeah.
I started
I think
looking
we
into
all
it when she
knew
came
about
into
it.
our
No,
office.
no. It was Linda.
It was Linda
It was Linda.
because I started looking into it when she came into our office, and I thought I had it right, and I called over here to get direction, and you were sitting with her sister.
Yeah. 2 of the 3 people lived here in Kansas. The 3rd one's still in Oklahoma.
Yeah.
Which the guy in Oklahoma had already done his taxes, but they used the wrong number.
Right.
So he paid capital gains tax more than he should have.
And I think we advised both. I know I did. I'm sure you did. Advise both of our clients to get with their brother and have him do an amended return
We did.
using our number.
Yeah, we did. I think we even offered to do the amendment.
Yeah.
So the reason they got a little bit more of an amount is because whoever government official people took it from them.
They got, like I said, State Highway 11, I think it was cutting through their property. They wanted to make it into a super tube.
This.
So they were to increase the footprint of the highway on both sides. And they owned property on the long side of the road.
Typically, if the state or a governmental entity like that comes in to take property, they usually come in with a number high enough
They just say, okay.
that people don't argue with it. You know, oh, you're going to take 3 acres of land and you're going to give me $40,000 for 3 acres of land. Nobody's going to balk at that, even if you have to split it 3 ways. They're going to be like, okay, take 3 acres of land along the highway. I'm fine with that. You know, as opposed to coming in and saying, here's $3,000. We're going to take 3 acres of land. Now they're going to fight, spit, and argue. But when your client is looking at getting $12,000 for selling, which is technically what they did, an acre of land, well, we need to know how much that land was worth when it was sold. Otherwise, that whole $12,000 is
It's going to be a
capital gain. It's going to be income. Now, if I can come back and say you got $12,000, but that acre of land's worth $9,500, well, now you only have a capital gain of $2,500.
Much more desirable.
Yeah.
Much more desirable and a lot easier to hopefully, with that $2,500 gain, keep my client under the number she needs, so that $2,500 capital gain is 0% instead of 15%.
So a fair market value is considered at the price at which the property would change hands between a buyer and a seller, neither having a particularly good reason to buy or sell, both having a reasonable knowledge of all the necessary facts. That's fair market value. No secrets. Nobody's holding a gun to anybody's head saying buy this or sell that. You just have willing parties that are wanting to partake in a transaction. Nobody knows that there's no secret that I know there's oil under that ground. Everybody knows that there's oil under the ground, or no oil, whatever. For example, the cost is not used as a basis for items such as land gifted from grandma in 2014, or a ring received as a birthday gift. The cost to me was nothing. I didn't pay for it. Well, that's not fair. If I got rid of it, I have to pay capital gain tax on all of it.
Yeah.
Basis is dependent on how you got it. For example, fair market value of the adjusted basis of the property may be used. Sales of similar types of property or on or about the same date may help you figure out what the fair market value for you is.
What is this new thing that's in the TikToks, of course, can't believe it, about inheriting a home now,
Did
and
we
then
already talk
having the
about
kids
this?
pay that fee before
Yeah.
they can inherit it.
Yeah, we've talked about that the other day.
Yeah.
You brought it up the other day. You're asking it again.
Yeah. No,
I
there's
just don't get it.
there's no fee. There's no fee. You inherit the if your parents owned a home 60 years, okay, and you inherit, their mom and dad pass away and the home goes to you because you're the sole heir. So you inherit this home. That's yours. There's no fee on that. If you were to turn around and sell the home, then you could have that home appraised prior to the sale, and whatever the fair market value of that appraisal is what your basis in that home would be. So if your mom and dad 70 years ago bought the home and the land for $10,000, and now you inherit the home, and a month after you inherit it, you decide to sell it, and you have it appraised, and it's appraised for $350,000.
The way that thing makes it sound is that the
Yeah.
instant you
Yeah,
inherit it, you owe
You don't.
You
a lot
don't.
of fees.
You don't.
You don't.
You don't. There.
At least not to IRS.
Right. There's.
So
There's
again,
when
you
it,
said a dirty word.
TikTok.
TikTok.
Exactly.
When
what
it
I'm saying,
when it comes to things like taxes and everything else, there's a lot of bullshit on TikTok to try to scare people to vote this way or that way.
Or do something.
Yeah.
Somebody's got an angle for whatever reason.
Yes.
Well, in fact, Walmart's supposed to be closing on the first.
Yeah.
Whatever.
A multi-billion-dollar a year corporation
I
is
don't
closing
think
on the
so.
first. Yeah, I'm thinking not.
I don't think so.
I'm not believing that.
I don't think they're going to stop food their staff either.
That is that's going to happen.
That,
I don't see that.
I do.
That's going to happen
It's
because
actually on the actual news.
it's on the news, and if you go to the DCF website, it's actually listed on their website that if a continuing resolution and the government is not open, there will be it's not that there won't be any benefits, but benefits will be suspended until
A later date.
until the government reopens.
Yeah.
The only state that I know of that's getting around that is Virginia, and that's because Virginia is declaring the shutdown and the fact that
State
SNAP's
emergency.
not going to be paid out from federal a state emergency, and they are pulling funds from their state FEMA funds to cover SNAP in their state.
There is another path that's being
I heard
executed,
they were going to turn it into couch.
including the state of Kansas, are suing the federal government over the SNAP benefits. So
Yes.
if they can get a court injunction,
I saw one news report on TV that said that they were taking votes on it, and certain people said no, and some
Huh?
said yeah, and it was
You have
All right.
an appointment.
Today?
Yes.
fair market property received as a gift, the donor's adjusted basis just before it was gifted is and the fair market value at the time it was gifted. We must know.
Mm-hmm.
It's also necessary to know the amount and type of any gift taxes that were paid on the property. At the time of the item or property was gifted, if its fair market value was more than the donor's basis, the donor's adjusted basis must be used for figuring a gain or a loss. If the fair market value was less than the donor's basis must be used in the event of a gain, and the fair market value for a loss. We're just trying to make sure that you pay the maximum amount of tax.
So if your parents paid $10,000 for your home, you inherit it, it's now worth $350, and you sell it, you get to use the $350. But if your parents bought a home for $50, you inherit it and it's only worth $20, you still have to use the $50 when you sell it.
So Jim received an acre of land as a gift from Grandma. At the time of the gift, the land had $8,000 fair market value. The donor or grandmother's adjusted basis was 10. After Jim received the property, nothing happened to it. If Jim sells the property later for 12, he will have a $2,000 capital gain,
Long term.
long term.
Always long term.
No, well,
Yes.
When is it
I
inherited?
Inherited land or inherited
but
property.
this is gifted. Gifted, I get to include
Okay.
the
I was-
donor's
I
the
was
donor's
thinking-
time.
I was
Yes.
thinking inherited. My bad.
Yeah.
Inherited is long term.
Always long term.
Gifted is I get to take my short term, long term is dependent, but it also get to include how long the donor had it.
If grandma had the property for 6 months and gifted an acre to him, it's short term unless he keeps it over a year.
A year.
Yeah.
Right.
Then it becomes long term.
Well, actually, he'd only have to keep it for 7 months because he gets to count.
Right. But that's
Yeah.
what I'm saying. If grandma bought it in January and gifted it to him in June or July,
yeah.
he would have to keep it until after
February.
January of the next year
Yeah.
to classify it as long term.
Right. Stocks and bonds are purchased. The basis is generally the purchase price plus any commissions. If stocks or bonds are required other than by purchase, it is typically determined by the fair market value at the time of the acquisition of the previous owner's adjusted basis, depending on the method of acquisition. It is important to keep track of the basis per share of all stock bought and sold. Events that occur after the purchase of the stock can require adjustments, increases, or decreases to the per share price. Thank God it's stocks, and thank God there was a law passed in the early 2010s requiring brokerage houses to actually keep track of this.
Yes.
Up until then, they weren't required to keep track of this.
No.
And so it was kind of a grab bag on information.
And there's a spot on the 8949 for adjustments. You can go in and click on there. Put like if they had $75 in trade commissions that they paid out, then you can go in and you can put that in there and put it under the heading, and it'll adjust everything on there to include what they paid in commissions.
If you have to do that, sometimes it's already included in the number.
Yeah.
If the basis is not known and there are no original documents, contact the stockbroker for assistance. Just because the 1099-B is blank, don't leave it there. I had a client. We've got 2 good stories today. Good story number 1, I had a client come to me, and I was doing her taxes, and she was telling me about how she owed $10,000 from the previous year to the IRS. And she was getting a refund this year. She was wondering if she was going to see it. Well, no, you're not. Why did you owe $10,000? Because the little old lady, she's retired. It's like, that's a lot of money. What the hell happened? Oh, I stole some stock. Okay.
Where's your last year tax return?
And I had it. So I looked at last year's tax return, and I looked at it and realized that the basis was left blank. She sold, I forget what the number was, let's just say she sold $60,000 of stock, and since there was no basis reported, she was paying tax on $60,000. I said, this is wrong. I said, contact your broker. Find out how much you paid for this back in the day. And she did that. Well, it comes out that she sold the stock for $60,000, but she paid $80,000 to get it. So instead of having a $60,000 gain that she was paying tax on, she actually had a $20,000 loss and didn't owe a dime. Needless to say, I filed an amended return.
And told her, yes, you're getting your refund this
You're
year.
going to get your refund this year, and by the way, all that money that you've already paid in, you're getting that back too.
Plus interest and stuff.
No, not necessarily.
not interest because it was her mistake, not the IRS's mistake. But just the fact that she was out from under $10,000,
Yeah,
Yeah.
exactly. That's
And see-
plus, ooh, I'm in.
and
Yeah.
she'd already paid in like $800 because she was making quarterly payments. She'd set up a payment plan. Everything that she'd sent in that payment plan, she was getting back.
Yep.
Well, needless to say, I get a client for life on that one. And just so you know, the perpetrator of the bad tax return, I don't mind saying this because it's funny. Daddy's Money's Pawn Shop. And if you're gonna get your taxes done, you're gonna have somebody else.
The reason why they were doing it is so that they could turn around and hold your refund when it came back to them to pay you whatever purchase you made for that day.
Yeah, well, but she owed, according to them, she owed $10,000.
Yeah, so she didn't get what she wanted that day.
Well,
And I don't know what the thing was, but I'm
That's
just
how
saying.
they did it.
well, that and Daddy's money was
I know the guy that owned it, and his name was Darren.
they were skirting federal banking laws by a
Taking the
very
refund.
fine thread.
Because they were
You-
receiving the refund
Well,
themselves.
you come in and have your tax return done here, have a check
Sent
printed
back
in
to
the
that
office. When you come in to pick up your check, we'll send you next door to our check cashing service to cash your check
And take 15%
at our
of
check
it.
cashing
Mhm.
service. Charge you the 10% fee to take that. So I not only charge you for filing your return, I get 10% of your refund to cash your check, and then you can come back over here and pay me more money for what you've got in hot.
What's it?
So,
They were skirting.
Laundering money.
Well,
not really.
They were just trying to find a way to make it.
because Daddy's Money Pawn Shop wasn't the actual one. It'd be like a client coming in here, getting their taxes done, having a check printed at the office, and then going to one of Brett's check cashing stores and cash the check.
But we did that for a little
Right.
But it's
You're
we just give them an option of a place to go. It's not that we were saying go here
Right.
or else.
while.
right. It's not like Brett's check cashing store was next door, and we're saying you need to take this next door, cash that, and then come back and pay on your account because now I know you've got money, which is what Daddy's Pawn was doing. The check cashing store next door might not have been Daddy's Pawn check cashing, but the same people owned it.
So when you get a 1099-B that has no basis and you report it as such, the IRS isn't going to go out of their way to figure out. Your basis is zero.
Yep.
It's up to you to prove that it's something else.
Unless there's a huge red flag, they're going to typically accept whatever you send to them.
Yeah.
Especially if it comes from a prep service like us.
Dividend reinvestment plans are a way for shareholders to reinvest variable amounts in a company over the life of the investment. They're still subject to tax.
I wish they would explain that to their clients a
Yes.
little better.
If I'm just out there owning 100 shares of Walmart and they declare a dividend of $50 a share, yeah, I'm pretty happy. But if I'm telling my broker's house is that, okay, every time that I get the dividend, buy more stock, some people think, well, I never got the money. I shouldn't have to pay tax on it. No, you got the money. You just spent it right away. You owe tax on that.
45-minute conversation I'll never get back.
At least once a year, we'll have that conversation. With somebody that doesn't understand, well, I never got the money. That's not the point. Technically, you did get the money. That, they don't do
job of explaining to their clients, you know, you might have $1 million portfolio, you're not paying taxes on $1 million. Yes, last year your portfolio was worth $1 million. This year it's worth $800,000. You don't get to claim a $200,000 loss. You didn't sell anything.
Yeah, that's the other thing.
Is it just with the market fluctuate?
When the market goes down, so back in 2012, that was a big discussion.
Yeah.
Oh, well, my portfolio lost $40,000. What can I do about that? Well, not a damn thing.
Did you sell any of it
Yeah.
for a $40,000 loss? Well, no.
No, I just left it in there. Well, then no taxable event happened because you have the possibility, as long as you left it in there, that you'll get it all back. Should you pay tax on that? No. I'm not, when I own shares of Walmart and it goes up $100, I still don't owe tax on that until I actually sell the shares. Same if I own shares of Walmart and it goes down $100. I don't have a write-off until I actually sell the shares. The taxable event is me getting rid of the shares.
How often do they fluctuate? What's their?
Daily. You're in the stock market. If it's open today, it's fluctuating. At the end of the day, it might be close to the same that it was. Or it might be way up or it might be way down. It just depends. That's the stock market. It's fickle. Declare a big profit for the quarter, your stock's going to go up. Word gets out there you're being sued, your stocks are going down. If you sell mutual fund shares purchased at different times and different prices held in a custodial account, you may elect to figure your basis using average cost per share, or sit down and figure out, okay, I bought these shares here and that's what it cost. Bought these shares on this date and that's what it cost. Take your pick. Now again, through the wonder of the brokerage law that was passed, this is being done for you.
Yes.
Your 1099-B is going to reflect that. But this is the same thing, so when I talked about figuring my Canadian clients and having to convert capital on exchange rate, it's the same value that I do. Fair market value is going to be the highest point of the year and the lowest point of the year, averaging two out.
Your little old lady with the AT&T stock.
And we haven't got there yet.
Okay.
Technically, it's Verizon. No, yeah, it was AT&T. Never mind. John's father died in February 24 and left him 100 shares of XYZ. Father paid $6,000 for it back in 2009. $6,000 is not the basis of John's stock. On the date of his father's death, XYZ was trading at $105 per share. Since an alternate valuation date was not chosen, the basis of John's stock is $10.5, not $6. Which, great. I mean, this is actually going to help him out if he goes to sell it. He's not going to have as much of a capital gain. Figure the gain or loss in the sale of property by comparing the amount realized with the adjusted basis. The amount realized from a property is everything received for the property, the sales price. If the amount realized is greater than the adjusted basis, the difference is a gain. If the amount realized is less than the adjusted basis, the difference is a loss. Generally, no gain or loss is recognized on a transfer of property from an individual to a spouse, or if incident to a divorce, a former spouse. It was just transferred. I was forced to, or I wanted to. Well, we're married filing jointly, especially. Yeah, I don't have to worry about that. I just rearranged the names. There wasn't a taxable event as far as the IRS is concerned.
Nope.
So you go to figure the gains or loss. Might as well talk about it now because Matt keeps bringing it up. Linda had a client. Actually, it was her daughter's mother-in-law.
Hmm.
She was doing her taxes. She sold some stocks in AT&T. Great. What was her basis in it? Well, we don't know. When did she buy the stock? 1968.
Oh my.
Our job is now to try and figure out what the price of the AT&T was in 1968.
They don't print it on the certificate when they send it to you?
No.
No.
When the law went into effect saying that they had to keep track of basis and whatnot, that was 50 years after she bought the stock.
Right.
So if the original brokerage house didn't keep track of the basis when she bought it in 68, the new brokerage house
Isn't gonna have that information?
isn't going to have that information, and they're not required to look it up, because as far as they're concerned, the information they have is there was no known basis.
So here's another week that I and Linda invested in trying to figure out a basis, because there's a lot of complicators on this one. The AT&T of today is not the AT&T of 1968.
Southwestern Bell.
Yeah, basically, because, well, first of all, you had the breakup of AT&T
Mm-hmm.
into all the baby bells. So what do you do at that point? What shares does she actually own at that point? Is it AT&T shares? Is it Verizon shares? Is it Northwestern Bell? Southwestern Bell? Don't know.
Pacific Bell,
Yeah, Pac Bell?
Ma Bell.
Notec?
That's definitely
Well, and then we go further on, just like you said. The AT&T of today is actually the Southwestern Bell from the breakup. Southwestern Bell eventually got enough money and capitalization to turn around and buy AT&T. And then they just call themselves AT&T. But technically, it's Southwestern Bell. We've got to negotiate all of that to come up with the stock price. And it's not as simple as just looking it up necessarily. Well, I could go on Yahoo and look up a historic price. But that's not necessarily fair either.
It's still like hearsay.
Well, but it's not
Like
the
our
same.
TikTok videos.
It's kind of not the same company.
Mhm.
And Lord knows about the inflation on that.
Yeah, she bought 1,000 shares at 70 cents a share, and now those 1,000 shares are worth $250 a share. That's a big difference. That's a big jump.
Well, and still, I'm still left with the question of which share. I mean, what company do we actually hold here?
Mm-hmm.
Fortunately, I stumbled across on the AT&T website a calculator
Oh, cool.
where you could plug in when you bought it, and they would return the fair market value of it back at that time. Voila, I had a basis. Like I said, it took us a week. But I wasn't going to leave it at zero because, again, that's not right. And she couldn't afford to have a big capital gain. She was retired, living in a rest home.
Yeah, it would have been Linda's daughter probably to pay that tax bill.
Yeah, because her husband was on disability,
Yeah, it could have been. And to make matters worse, although it wasn't known at the time, that was her last year too.
Oh, right?
Yeah.
They'd have to pay her later on anyways, then.
No, because now I had my new valuation date. My new valuation date would have been that day. Actually, it would have been a hell of a lot easier.
Yeah. Yeah, if she would have passed away, Shane could have gone in and said, okay, what's AT&T trading for today? That's my basis.
Yeah, that's my new basis because it's inherited shares.
So she might have bought it for 75 cents a share in 1968,
68.
But if those shares were trading for $125 a share today, your new basis on inheritance is $125 a share, not 75 cents.
If you have a taxable gain or a deductible loss from a transaction, it may be either a capital gain or loss or an ordinary gain or loss, depending on what you sold and how long you had it. We need to know, because the tax rates are different. The following items are some examples of capital assets: stocks and bonds, your house, furniture, household items, your car, gems, jewelry, coins, stamp collections, gold, silver, other metals, all those things are capital assets. Some rules limit your ability to claim the full amount on certain types of losses all at once. When a capital asset is sold, the result is a capital gain or loss. And that capital gain may be taxed at a lower rate than tax rate for ordinary income. And we've already been exposed to that one. Depending on some other factors, I might pay zero. I sold $10,000 of shares this month. What's my tax on that? Zero. A loss from the sale or exchange of person-used property such as a house or a car is not deductible. That kind of sucks. I lose money, I can't do anything about it. If I sell it for more than it was worth, I have to pay tax on it. That doesn't seem fair. A loss on investment property is subject to limitations. Well, what's the limitation? It's really just $3,000 per year until I use it all up. And that's just if I have negative effect. So in effect, I had a client, he was selling some stocks at a loss, and he was counting on that for next year, because he was going to sell some things at a gain, but he was happy that he was carrying a $12,000 loss from the previous year. That means that he could sell this stuff at a gain and not pay as much tax on it because he had a $12,000 loss to count against it first. George was pretty shrewd that way.
Didn't you have a pilot or something like that had a company that he had just so he had a lot, or no, it was the architect.
The architect was doing that because he was trying to, he was making a boatload of money being an architect. He had these other side hustles going on just so he could lose money legitimately.
Right. Running the businesses, but he was running them and they were resulting in losses, so they were reducing the amount of his income, so he was paying less in taxes.
The sale of a non-capital asset generally results in an ordinary gain or a loss. An ordinary gain is taxed at ordinary rates. Ordinary losses can't be deducted.
Wouldn't that be something? If you ran your income tax from year to year, you make $60,000 this year. Next year you only make $45,000. You can claim a $20,000 loss from the previous year.
Yeah, that would be great, wouldn't it? Holding period is the determination between short and long-term capital gain or ordinary income. Getting a lower tax rate on capital gains depends on the holding period or how long the asset was owned before the sale. Short term if the capital asset was held for 1 year or less. Long term if it was held for more than 1 year. Pay attention to the semantics. When you take the test, they will confuse you.
Yes.
They will word it so poorly that you need to read it 5 times.
Yes.
And they're doing that on purpose, by the way.
Yes. If you bought a property on January 10th and you sell it on January 10th of the next year, is it long term or short term?
Short.
Short term, because it is exactly 1 year. But
I
if
thought
you
couldn't count the first day.
you don't, the first day is day zero.
That's
why
why
I'm
you gotta
saying.
wait till the next day.
That's what I'm saying. If you buy it January 10th of this year and you sell it January 10th of next year, it is a short-term sale. If you wait and sell it on January 11th of the following year, or January 12th of the following year, then it is now a long term because it is over 1 year.
You want to complicate that? Alrighty, here's your question for you. I bought the share on January 1st of 2024. I'm going to sell it on January 1st of 2025. Long or short? Leap year.
Leap year.
That's not.
but
That was loaded.
it was. But in a leap year,
I didn't know this was a leap year.
24.
Presidential election years are leap years. So
Last,
you got one more day of bullshit.
yeah, last year was a leap year. So, last year was a leap year. So if you bought it January 1st of 2024 and you sold it January 1st of 2025, you actually held it for 366 days.
I think
Yes, it was a
my
loaded question. I would set you up, yes,
But
I
you ha-
admit to it. But
But
you just can't look at it from the point of view. You need to think.
Yeah.
you have that that potential situation every 7 years.
Four.
Is it every 4 years?
Every 4 years.
Every 4 years.
Every
An election
stinking
year.
presidential election year.
I know.
So you get an extra day of the bullshit. It needs to be in November, not, put it at the end of November.
But we do the elections in November, right?
Yeah, but
Yes.
if leap year was November
Why do
31st,
you have a leap year? I don't get it.
because if you didn't, you would actually lose. All of a sudden, winter would be in July, Dogs would be out, cats would bark, all sorts of catastrophe.
Think about it. The original calendar was a 13-month calendar, not 12.
Yeah,
That's
and that's how they're making up for it.
Yep. Well, yeah, the original calendar was run off of a 28-day cycle, which is a lunar cycle.
We've already said this. The day I bought it is not counted as the day I have it, which is kind of silly. But it's not the only place where that's where that can be true. I mean, let's face it. If I'm figuring per diem for my trucker, your first day out, your last day out don't count as days out. So at least this one's a little more fair because I get to count the day I sold it as the day I had it.
Yep.
Larry bought a wagon on June 18th of 23. If he sells the wagon on June 18th of 24, this is wrong.
Yes, because June 19th would be his 365th day of holding. June 20th would be his 366th day.
Yeah, they forgot that.
24 was a leap year.
Yeah, they forgot to adjust it. That's why the slide's wrong.
Oh.
The slide is wrong because it was a leap year. They did a search and replace.
We were holding hands when they made that.
Yeah.
Me and Lois knew.
For inherited property, the property is deemed to be held for more than 1 year, regardless of how long you held it before it was sold. For gifted property, if the basis is figured on the donor's basis, the holding period includes the donor's holding period.
Yep.
It gets a lot of confusion. Let me tell you how the computer handles this. It's going to ask you how you acquired the property. And most of the time, it's just going to be, I bought it. But sometimes I inherited it. That's an actual answer to the question, obviously.
Mm-hmm.
Then it's going to look at bases. And you're going to plug that information in. It's going to make your decision for you.
It's like on that piece of paper I got from the bank the other day that said what my loan origination amount was.
Mm-hmm.
That's my basis.
Yes.
More or less, yeah, that's how much. It's not a true basis if we're talking about because how much did I pay down? Because that's not included.
5,000.
That's not included in the loan origination amount.
Right. But then when they told us how much my house was worth,
Well, yeah, but see, if you got a loan on the house for $50,000 and you had $10,000 down, your basis in the house is $60,000 because you put 10,000 in cash and took a loan for 50. Okay. Now, because it's a house and you're going through the next 30 years in that house, improvements that you make, you can add to that basis. That's why we always tell people that are selling their homes that they've had for years, before you sell it, get it appraised. Because if you have that appraisal prior to the sale, you can use that appraisal amount as an adjusted basis for the sale of your home. Because your home, 30 years later, is worth more than it was when you originally purchased it.
Especially nowadays.
If my land is actually what's worth
Right, but when you sell, when you sell your plot, you're going to sell your house and all of the land. It's going to be one static price. The only thing the only reason we separate land from structures is for depreciation. When you're talking about selling something, when you're talking about selling something, if the land is worth $150,000 and your house is worth $25,000, that plot is $175,000 fair market value. Because when you sell it, you're not just going to sell the $25,000 house; you're selling the entire plot. And even if you just had barren field, 100 acres of barren field, and you sold it, if you sell it at a profit, that's a capital gain. Even if all that was out there was wildflowers and cockleburs.
Yes. Gains and losses and the details of the transactions need to be reported to the IRS. Hopefully you get it reported to you. For some transactions, the statement is issued from a broker. But for others, you've got to figure it out. Depends on what you're selling, really. I mean, if you're going through a broker's going to give you that information.
Yep. Should have it.
They're required to have it. Sales of stocks, bonds, mutual funds, etc. Form 1099-B, proceeds from broker or barter exchange transactions, or a substitute 1099-B will be issued. This will have improved information about purchase dates, purchase costs, and may be included if it's known by the issuer, and it's really supposed to be their responsibility to come up with it. You should also keep an accurate record for yourself, just in case. I mean, let's face it, it's too much to ask of Charles Schwab today to go figure out what the price of the shares that she bought of AT&T. I think it was because she was working for AT&T, so it was an employee stock option program.
Mm-hmm.
They have nothing to do with it, so they wouldn't have that information, nor would they expect it to have that information.
But then again, I would expect them to have that information because they're AT&T with AT&T.
Well, I should have expected them to know how to get it faster than I did.
I would have assumed when the brokerage company that my stock is with now, especially if I migrated between brokerage companies, that when my account migrated to the brokerage company I'm with now, would have researched it and made sure they had a basis for it. Mm-hmm. Unfortunately, as I found out a few years ago from Shane, that's not necessarily true. People don't always do that, and that's how little old ladies that work 70 years at Boeing end up owing $250,000. You remember little Pearl when she came in?
Well, I know we have that lady down at Broadway.
That's the one I'm talking about.
$35,000 is what she owed.
Yeah.
And then she told somebody that she was going to go home and shoot herself.
Oh, that's not that lady.
No. Oh,
I'm
okay.
talking about the little black lady that came in,
And then her
had worked
man,
at Boeing for 40 years,
too.
got caught up in the Boeing Spirit trade. Boeing divested her entire retirement package and cut her a check. Just sit here. Here's your money. Instead of saying, we're divesting out, what do you want us to do with this? Do you want us to roll it over here into Spirit, into your retirement account at Spirit, or do you want us to cut you a check? No, Boeing just cut people checks.
They did. That was a bad
Was
year.
the other?
So I had people in their 70s coming into the office to do their tax returns.
They came in as a couple, right?
With
They lived in the
10
same
yeah,
home,
with-
but they weren't. Yeah.
Yeah, with 1099Rs for $250,000.
Don't they have to give you that option?
They didn't
I-
have to.
That's what I thought. I got on the phone. I was pissed. I called Shane, and Shane's like, "Yeah, I understand it's a bad thing, but no, technically they don't have to do that." As far as I was concerned, their financial officer at Boeing was grossly negligent. Because that's, I mean,
But
$250,000. You're just going to cut somebody a $250,000 check?
And
And
there
not
was
more
two
than
of them. There
And-
was a
and-
man
yeah.
Well, no, they're-
What if
no,
they're
no.
old enough, it's not taxable, right?
Huh?
no.
No, it's all taxable.
So
Oh,
it's
these are stocks and bonds. Okay, I'm
No,
thinking
this
of
is
the
a
IRA.
retirement. This is a 401k.
yeah.
Oh,
It was being managed through Boeing and State Street, and they divested themselves of that. When Boeing sold to Spirit, they didn't want to keep track of that information anymore. They didn't want to be responsible for it. So instead of, like Matt said, given the option of, well, do you want us to roll it over into whatever Spirit's going to set up for you? State Street / Boeing said, nope. Here's your money.
Here's
Have a nice day.
Here's $250,000. This is what this is what your 401k retirement is worth through us at this point. Here's your money. We have to take out 20% for federal, 5% for state, so we're going to do that. Here's your check. Bye, see you later, holler. Didn't ask them what they wanted to do with it. Didn't inform them that that was taxable income that they had to claim on their tax return that year.
And was it also?
but they
that
already took
weren't-
out the 20%, right?
Yeah, but
So if I
20%
take
of
out-
$250,000 is not enough.
I take
Nowhere
out
near.
$50,000 on $250,000. It's going to get added to the $75,000 that you're making.
They
So
were
you've
still
got a
working.
$350,000 adjusted gross income for that year.
They took out the bare minimum requirements, and that was nowhere near what was necessary.
Yeah,
Plus, they weren't holding federal or state.
No, they did, but they just
They
held
did.
it
No,
at the
I
minimum.
didn't think
They
they
did.
on that
They
one.
did.
They
And
have
just
that's,
at the
that's a
minimums.
federal requirement.
Oh.
20% and 5%. But at the end of, I mean, even with $50,000 being withheld, she
Nowhere near
still
enough.
owed $35,000, and because their people didn't explain it to them, she got this check for $220,000, turned around, paid off her house. She didn't have $35,000 to pay the federal government for the taxes for that year.
Yeah, imagine the penalties on that, she didn't pay on time.
Actually, the IRS penalties aren't terrible. They're cheaper than crime. And it's a lot of money, yes. No,
Yes.
I won't argue that fact.
$35,000 is a lot of money, and you can get out of most penalties as long as you set up a payment plan prior to April 15th.
And you honor it.
And
keep
yeah,
on
and
it.
you don't default on it. The only thing you get hit with at that point is interest. That's the only thing you can't get out of.
And it's really, interest is really not that much. I had an
Yeah,
IRS
they
agent tell
compounded
me
daily.
it is compounded daily, but
It's like
it's
1/2
like-
of a percent.
it's like,
Yeah.
yeah, it's like
Yeah.
1%.
Yeah, Matt
It's
knows
not
what the
very
number
much.
Yeah, it's like point.
Zero,
I looked it up. Yeah, it's like
Some-
0.0000978 or something like that a day.
Yeah, everybody flips out over the interest. It's
'Cause you're
it's
thinking 20
nothing.
and 30%.
No,
Yeah.
the thing that's significant is the late payment
Oh
penalty.
yeah.
But that's a different chapter.
Yep.
This is what it, excuse me. This is what 1099B looks like, and let's hope that it's filled out completely. Otherwise, we're gonna have to do some digging, or at least inform the client that they need to contact their broker and tell them, "I need more information. Let's have it."
Is this how Schwab and what's his name does theirs?
No, they send out a consolidated 1099, and so I got to look through this stack of paper.
Yeah.
Like Edward
Yeah,
Edward
the other
Jones.
guy,
Yeah.
Yeah, that we
I
get
got to
the
look
wrong
through a
one.
stack of paper looking for these, and they're scattered all over the place.
Yeah, I
Well,
don't like having to flip.
They kind of are because they're broken down into categories of long-term, short-term, basis known, basis not known.
Edward Jones has actually gotten really a lot better
They've
because
improved it?
when you open up their package
That's true.
and
They
you
have
take
a
that
summary
first
page.
one off, they've got
Yeah.
that summary page with the INT, the DIB,
Yeah.
the miscellaneous, and then the 1099B.
The next page, yeah, it has
Yeah.
it broken down.
And then,
But I still go through and try and find them just in case.
well, I do. I take my summary pages and I set them up, and then I go through and I pull out my my short term, my long term transactions, because I don't sit there and put in an 89.49 for every single transaction.
No.
I separate my transactions, short term, long term. I make sure I have copies so that when I scan everything in, I'm scanning in the entire set of short term or long term transactions. I do 189.49 for each type of stock, and then I scan in and I add as a PDF the actual transactions.
Right.
That way, I don't end up charging my client $3,000 because I've put 400 89.49s on there.
All right, so on here is going to be the taxpayer's TIN, the receiver's TIN, a description of what was being sold. So, like they said, 100 shares of XYZ is an example. The date it was purchased, the date it was sold, the proceeds from the sale, the cost of the sale, which I wish they would kind of flip those boxes around.
The cost of the sale? The proceeds and the
Well,
basis.
yeah, but the proceeds should go with the date sold, and the cost should go with the date acquired.
Yeah,
Those boxes need to be flipped.
yeah.
They
Yeah,
also
and-
mark whether or not it's short term or long term, because they know, especially for short term, they know.
Well, they're depending on what box you check, the IRS knows, may know, or has no idea.
Well, and that's that box 6. Was the gross proceeds or the net proceeds reported to the IRS? They might check one of those boxes. They might not check any of those boxes, which is a third option,
Right.
a secret third option.
A, B, C, D, E, F.
Yep. Which we've talked about already.
Yes.
We're going to talk about it again. When discussing cost basis reported at 1099B, the term covered security describes investments which the financial institutions are required to report realized gains cash. Sinuses are draining. It's causing me a problem. Individual stocks purchased after 2010, mutual funds after 2011, bonds after 2013. It is the brokerage house required to tell you that information if it falls in that window. Even if it's falling outside of that window, they're starting to report that information as best as they possibly can. Especially if you've been at the same place for that entire time.
Yep.
When a 1099B states the transaction was non-covered, it means that not a transaction is covered security. It means they don't necessarily know what your basis is. And now your research begins. Real estate transactions, you might receive a 1099-S.
And I hate those forms.
Yeah.
They are so woefully incomplete.
They are terrible. All they show is basically what the house sold for.
And that's it.
You've got to go through and find all the other information you need. Otherwise, you're going to be reporting to the IRS a sale of $250,000
Do we have any of these coming?
once a year.
I'll have one this year because the Princes sold one of their rentals, so they'll have a 1099-S. But because it's a rental, you've been depreciating it. I've got their worksheet from last year, so I've got all the information I need to accurately do that. But you, for example, you've owned your home for how many years? 23?
23.
Okay, so in another 10, if you sell it, you're going to get a 1099-S that says, well, Suzanne Bromley sold her home for $150,000. Okay? So is $150,000 profit for you? No, it's not,
Okay,
because...
to an extent it is, because I paid $44,000 for my house.
That's your
but
basis.
44,000.
That's what you bought it for 30 years ago.
Well, 23 years.
Get a new appraisal.
23 years ago.
But my new thing that we just got is 148 or 84,000.
All right, so now it's your adjusted basis.
Okay, so now that's an adjusted basis.
Yeah.
But if you didn't know any of that and you just sold your house for $150,000 and brought that into your tax preparer,
They don't have anything.
they don't know what you
They
paid.
do the math.
Well, they don't know what you paid for the house. They don't know what your appraisal is. They can go to Sedgwick County property tax and see what the property tax appraises your house at or
You quit?
assesses your house at.
No. It's a message for you.
Who's that?
Protection 1 Plus.
But
It's
that may or
over
may
the-
not be
it's over
accurate.
the-
When we get a 1099-S, all it shows on there is
Whatever.
what
It's over
the
the
real estate
audit
company that you went through to
protection
sell your
on
house for
Fusion.
sold that house for. That's it.
All right, whatever.
If the client doesn't have all of that other information, then that $150,000, as far as the IRS is concerned,
That's who it
is a capital gain.
You're the boss, man.
Now, in some instances, like yours,
We do not want any.
Just a advertisement
Thanks.
for y'all.
thank you.
Have a good
I
one.
want to know
Yep.
where my mailman is.
I don't know what his
They
buttons
are.
are.
For you,
No, I have not seen my mailman in like 2 weeks.
Oh, really?
I got somebody else covering, and he's a freaking idiot, and my mail is like 4 o'clock instead of 12.
Yeah, I'm used to some. I do the route like once a week, and I'm across town the other 4 days of the week. But I've never even met the guy. Normally, I just
No, not here.
At her
I'm
house,
Oh,
talking
at your
about my
house.
house.
Oh.
which is still out of Chisholm Station.
Which is still out of Chisholm. I just live right here by South High.
Yeah, sorry
Yeah.
about that. Hopefully it's fixed.
All right.
so for a personal, for personal, $150,000 capital gain on the sale of a personal home for a single person, not a big deal. We can wipe that all out with the exclusion. But if that was a rental home or an investment property that you sold for $150,000, if I don't have a basis for that, you just now have a $150,000 capital gain. You're going to pay 15% tax on that $150,000. So now you owe $23,000 to the federal government for tax on that $150,000 because it's all income.
I'll burn it first.
Anyway, here's the 1099-S, and I agree with Matt. It's a woefully uninformative form because all it's going to say is when the house is sold and what it sold for. It's not going to tell you anything else useful.
What the hell? It passes over in like half an hour. I gotta get some of it.
So you go back
other
and watch the
investments,
video.
You may receive a 1099 DIV reporting ordinary and qualified dividends, capital gains distribution. We've already talked about this back in the day,
Yeah.
so I'm not going to spend a lot of time rehashing stuff that we kind of already talked about and talked about pretty good.
Yeah.
Personal use assets that are sold will require the date that it's acquired, the date sold, and the sales price and the cost basis. It is necessary to use receipts and other documents to report this information correctly to the IRS, which obviously. You'll need the date acquired, date sold, sales price, cost basis. Loss on personal use property is not deductible and may not need to be recorded unless a reporting form is received. Now, I sold my personal house. If I don't receive a 1099-S, I don't need to put it on my IRS form if I sold it for a loss. Nothing happened. If I sold it for a loss but received a 1099-S, which is a possibility, I have to explain why, using 8949 and such, why I don't owe any tax. I sold it for a loss. Here's my basis. So 8949 is the form that I take my 1099-B, my 1099-S, And 8949 is the form where I'm using. That is very mean of you to bring a cheese Danish in here.
From
It's one of my favorites.
From Starbucks, even.
Cruel indeed.
Cruel and unusual punishment.
I'm enjoying it too.
Yeah, shut up.
Guess who just failed her
She's
test?
not sorry.
Guess who just failed her test?
Sorry, not sorry.
Each category is then combined and summarized in Schedule D. So all my 8949s, and I can have up to 6 of them, all feed Schedule D. Schedule D, instructions direct on how to report the net gain. On 1040, how to refigure special tax rates that may apply, and how to figure any reportable or any allowable losses. 8949 Part 1 for short, and Part 2 report long-term transactions. So this is the short-term part. Again, we've kind of talked about this before, but we're back at it again. What I sold, when I bought it, when I sold it, what I sold it for, what I paid for it. And then this area here is any adjustments that I'm allowed to take. And then the overall gain or loss. Most of the time when we're getting stuff on the 1099B, 1099 DIV, we're not playing in this area.
Nope.
Unless we have a particularly good reason. Now, on the sale of the house, something we haven't necessarily talked about but have hinted at, if I sell my personal residence for a capital gain, I am allowed, if I'm within the rules, to exclude up to $500,000 of capital gain. If I could sell my house for $500,000 more than it's worth, or more than what I paid for it, sorry, and not pay any tax on it, because I'll be allowed to use column F to say I'm exempting this sale because it was my personal residence and I haven't sold the previous one in the last 3 years.
Yep.
That's the rule on that, by the way. I can exempt a $500,000 gain in the sale of my house, my primary house, but I can only do it once every 3 years.
It's another reason why we make sure if we have a 1098 that we're putting in for a client, there's a box on our 1098 in our system for you to check that says primary residence. Please check that box, because if all of a sudden we have a client that sells their house and they're claiming a $480,000 exemption because this is their primary residence, the IRS will go back 3 years and look, and if they've got a 1098 listed for that address and it's marked as their primary residence, they're not going to worry about it. But if you don't have primary residence marked on there, they could bring them in for an audit and make them prove they lived at that residence for the last 3 years and that it was their primary residence. It gets really sticky, especially if they have a vacation home in Gunnison or a vacation home in Florida.
That's not their primary residence.
That's not their primary residence. But
if they sold that house, they can't exempt it.
Right. But if you don't mark primary residence on their primary residence, and they have two, a vacation home and a primary residence, the IRS can make them prove that the one you're claiming the $500,000 exemption on is your primary.
All right, so the other thing that we're talking about here, this is in regards to 1099Bs. And remember, we're in short term, but we have the same questions for long term. So A, B, and C, or D, E, and F. A is A and D. Well, the basis was reported to the IRS on the 1099B. We knew what it was. We told the IRS that you paid this much per share when you bought it. B, short-term or long-term transactions on 1099B showing basis wasn't reported to the IRS. Even if there's a number there, that box can still be checked.
Yep.
The brokerage house put in a number, but they're not entirely sure that that's actually the number, so we won't tell the IRS about it. You can choose to use that number, or you can choose to come up with another one if you can find better proof. Most of the time, I'm just going to use that number anyway,
Yeah.
because it's probably pretty close.
Yeah. At that point, I am figuring the brokerage house did research on it and came up with a number they were comfortable with. They just didn't report it to the IRS.
Box C or
F.
F.
C and F.
CNF, or I'm reporting a capital transaction sale, but I don't have a 1099-B for it. For whatever reason. Maybe it's a 1099-S transaction. Well, I would check, actually, in this one, C or F.
Mm-hmm.
Most likely F, since I have 1099-S. It's going to be long-term. Most likely.
Have to be.
Should be. What?
If you're claiming an exemption, it has to be because it's 3 years.
Yeah, but if I didn't take, the question is not how long I lived there. The question is how long has it been since I took the exemption? Now, granted, I would make the argument that you need to live there for at least a year. But if I didn't take an exemption, even if I sold the house but I didn't take the exemption, I'm eligible to take it.
I thought it had to be your primary home for 3 consecutive years to take the exemption.
But there are loopholes to that, especially say like if 2 people get married and they both had a house up until the time that they got married.
Right.
There's a loophole in there.
Okay.
So they were planning on selling both houses, but they sold his first and moved into hers. Well, they met the criteria for either one or both.
Right.
Which one do they want to exempt?
Right. Which one are they going to sell? Which one do they want the exemption on?
Yeah. Well, they're going to sell both. They just decided to sell his first. Then they moved into hers.
Oh,
They
okay.
could take the exemption because, it was his place. It was his primary. This just happens to be the one they chose to sell first. So,
Yeah, but would you give them the married filing joint exemption or the single exemption?
joint, because they're going to be married filing jointly that year. They sold it as the year that they were married. They just didn't need 2 houses anymore. They didn't want to mess with it. They got rid of his bachelor pad.
I'd be happier if they sold it after they got married, though.
That's what he's
That's
saying.
That's what
though.
I'm saying.
Okay,
They're
okay.
selling it in the year that they got married.
So they're going to.
Well, yeah, but he's saying in the year they got married.
That's
then
married
you're gonna
filing
file
jointly.
them.
They'll qualify for the
Oh, yeah.
$500,000 exemption.
Period. Yeah. Okay. Yeah. You're right.
I think you're thinking wrong.
No.
I think you're thinking of filing the year they got married, but you're not. You're thinking the year before.
Well, no. What I'm thinking is if they sell it in June and get married in September.
They still are filing jointly.
Right.
Yeah, it
Right.
doesn't matter.
That's what I'm.
Yeah,
Yeah. Okay. That's what I was missing.
yeah. They just need to make sure they
You're
talk to a
The-
tax.
the- Yeah.
They
the,
just need to make sure they talk to a tax
that
guy
all
to
the
the
make sure.
filing status requirement.
That's why my gray looks blonde because I confuse myself all the time.
But I mean, here's the whole thing on that is that they know that they're going to sell both houses. They know that they're going to sell both houses in the time period of 2 years. They're only going to be able to take one exemption.
Right.
Which one? They have to choose. Which one are they going to take it on? Most likely.
The one they get the more money out of.
Whichever one they feel that's going to have the bigger capital gain on it, that's the one we're going to take the exemption on.
Because I could turn around and make an argument for that couple that's getting married prior to selling your homes. I don't care what you bought it for 4 years ago. Prior to selling your home, go get an appraisal.
Right.
And then once we have that appraisal, that's your new adjusted basis. What are you going to be able to sell your home for? What are you going to be able to sell your home for? And whichever one is more, that's the one we'll take the exemption on.
Now, can you pull that off as Zillow?
That is a reasonable place. The IRS would accept that.
Okay.
You
Okay.
pull it off of Zillow, you pull it off of Realtor.com or some of those other
Yeah,
places.
you don't have to actually hire an appraiser to come out.
I would still suggest that you did because, I
What do you
mean,
do
They
with the
appraise
cost
it
of the
even higher.
appraiser?
the chances
Add it
are
to
it's
the
going to
basis.
appraise even higher because there's always going to be something that we kept a secret, You don't always tell the tax authority that you finished the basement.
Right, like we added on that back area to ours.
Right.
Right. And if you have the appraiser come out and you spend $1,000 appraising each house, you just add that $1,000 to the basis of the home as part of the sale of the home. So the home's worth $150. You had $1,000 for the appraisal. The basis is $150,000 plus
$1,000.
commission and whatever else.
Right. All right, so here's 8949 Part 2, which is talking about long-term transactions. There's the other boxes, D, E, and F. Otherwise, it's the same thing. What you sold, when you sold it, when you bought it, what you paid for it, what you sold it for, and any potential adjustments that you might do, the result of that, and the overall transaction gain or sale.
Most common on 8949 up until this year, where we were marking Section C or Box C on, was people who were doing Bitcoin.
Oh, God, yes, that's still...
Because they would come in with an 8949. It wouldn't have any dates down for when it was purchased, no dates down for when it was sold. It would say that they bought it for this, they sold it for this, and those are the only numbers on the 8949. So we would go in and we would mark various times that they were bought. We would list the last day of the year for the date sold, mark box C, and run it.
Like I said, I can have up to 6 8949s, all feeding one Schedule D.
Yeah.
Chances are I probably only have at most 3. I'll have a short term, and I'll have the 2 long terms with basis reported, basis not reported.
Yeah.
That's the most common occurrence. And most of my short terms will have basis reported.
Mm-hmm.
If documents received are incorrect, there is a disallowed loss, or if you're excluding capital gain, the appropriate adjustment code is made in column F. The amount is in column G, and the result is then in the last column of the page.
Yep.
It's not that bad. Report the totals of 8949 with checkboxes A, B, or C and appropriate lines of Part 1 of Schedule D. Combine all short-term capital gains and losses with any short-term capital loss carryovers from the previous years. On line 6, to figure your net short-term capital gain or loss. On 7, if the amount is a loss, show it in parentheses. That's the accounting method of showing negatives, in case you didn't know.
Or just put a minus in front of it. It works the same way.
It works the same way, but that's not how the IRS wants it. If you were filling it out via paper,
Mm-hmm.
they'll want the parentheses. Schedule D, Part 1, short term. If you're really good, you can go here and just fill it out. Especially if I only have like one 1099-B, I can circumvent a lot of paperwork.
Just go straight to Schedule D.
Yeah, I could. Don't recommend it for new people.
I usually just fill out 18949 for short term, 18949 for long term.
Yeah.
And run it.
8949 DEF is your long term. The amount of loss showed in parentheses. Combine all the long-term capital gains and losses with long-term capital loss carryover from previous years to fetch your net for this year. And again, here we go. Part 2 of Schedule D. Figuring out what I'm doing this year. What my capital gains transactions are. Like we said, 8949 is not required from all transactions. If you receive a 1099-B, and the basis was reported to the IRS, and we don't have any adjustments, I can go straight to D. If I have a whole bunch, I'm not going straight to D. I'm going to show my work. I don't want any problems with the IRS.
If I have a whole bunch, I'm doing 189.49, scanning everything in and attaching it.
Right.
Because I've sat there and I had a day trader, and I
Jesus.
literally sat there for 3 weeks,
Yeah.
line by line by line by line by line, putting in an 89.49 for every single transaction he made,
Yeah.
long term, short term.
Short term mostly.
Yeah, mostly short term. But by the time everything was said and done, my fees were like $1,800, and we shot everything through. But I did get a message request from corporate wanting to know why I have an $1,800
Invoice.
a fee, $1,800 fee for tax preparation.
Yeah, that's actually an alarm.
Yes, and when I sent them everything, because I went line by line, but I scanned everything in. So when I sent them all of what I scanned in, they were like, okay. And then that's when they sent me back, you can just do one and run it, right? I'm like, okay. And since then, that's what I do.
Yeah.
That and the year we had the mistake on Brenda's day trader. That took us 3 weeks to comb through.
All right, to qualify for the option of direct entry on Schedule D, all of the following must be true. Transactions are not sales of collectibles, because they're different capital gains tax rate. 1099-B or substitute statement received indicating that they are all covered transactions. Everything I have is a covered transaction. Everything I have, we have a solid basis that was reported to the IRS. The ordinary box in box 2, the 1099-B is not checked. That means that I'm the capital gains tax rate, not ordinary income tax rate. No adjustments need to be made. I'm not changing any of the numbers for whatever reason. Then I can direct fill out Schedule D and go on my merry way. Part 3 of Schedule D is keeping track of my net to long-term, short-term gains or losses. So I have 6 possible outcomes. I have a net long-term, short-term capital gain, a net long-term capital gain, net long-term or short-term capital loss, net long-term capital loss. I can have a short-term and a long-term capital gain, or a short-term and a long-term capital loss. I can have all sorts of fun.
Yep.
And if you have somebody that's active in the stock market, like a day trader, you can have all of them. Or I had my guy, he's had share. He was retired, and so he had nothing better to do. So not only did he do short-term day trading, but he also kept an eye out for long-term investment.
The IRS pays you for losses, right?
No.
No, I just get to write off some of it relative to my income.
Mm-hmm.
But I'm capped at $3,000 loss.
You can write off capital losses against capital gains. But if you don't have any capital gains to offset your capital losses, then you're capped at how much of your capital loss you can take off of your income per year.
Yeah. Let's see here. So overall, capital loss is subject to limitations, $3,000, except if you're married filing separately, $1,500. Any remaining capital loss can be carried over to future years. If I have both a short-term capital loss and a long-term capital loss, they try to get rid of the short-term first. Gains from collectibles are taxed at a 28% rate, so they have to be figured differently. Because it's a special tax rate, basically.
When it comes to losses and gains, short-term, long-term is relative. You can have a $10,000 long-term capital gain and an $8,000 short-term capital loss, and they'll take the 8,000 loss out of your 10,000 long-term gain.
Yep. But you have some people that are smart. They know that they're going to lose their shirt. They're holding on to some stocks that are in a sense worthless because they want to use that loss against the sale of this stock over here, which they're going to clean up on.
Mm-hmm.
So then I'll sell both at the same time, and this one will offset that one, and I won't owe any tax. George was good at that.
Mm-hmm. That was my day trader. He worked for a brokerage company, day traded, and rented out houses. That was an interesting return.
So we have the 28% capital gain tax rate on collectibles, and then we have the capital gain tax rate on most other capital transactions, which could be 0, 15, or 20%, dependent on your other income. And you know, like I said, we've already kind of talked about this at the beginning. So, capital gains tax rate of 0 is if you keep it below those top 3 numbers. Which for most of our clients, that's not a problem.
You know, remember, those numbers are total income, including your capital gain.
Yeah, your capital transaction is in there. Capital gains at 15% applies for this. This is where my landlord guy was having a problem that I was telling you about last time. He sold that rental property. Well, the sale of the rental property plus his other actions put him in the 15% tax rate for capital gains.
Where my clients are at right now.
But the only thing that was being taxed at 15% was the capital transaction from the house.
Right.
His other income, unfortunately for him, was in the 32% tax bracket. And that explained a lot why he owed a boatload. There were some other factors involved in that. And most of that was their own doing. And I'd warned them in previous years, stop doing this! And they didn't pay attention.
They never do.
They never do.
They never do till we hand them the paperwork and they go, what the hell? Remember?
If he exceeded those, then anything that's left over is taxed at 20%, which is still very desirable because we're talking about some big capital transactions up here that might be taxed at 20%, where, like I said before, the ordinary income is being taxed at 32, 34, 36.
Yeah.
This is still a huge win. Comparatively. So a tax return can have taxable income but no income tax because the eligible capital gain income is being taxed at 0%. Completing the qualified dividend capital gain worksheet separates the ordinary income and the capital gain income, applies the rates to each category. And I don't figure 2 different taxes. This worksheet kind of throws all the numbers together and does the figuring of the different taxes for you, and then gives you one big number of taxes owed to put in taxes owed.
Mm-hmm.
Or you just let the computer do it and don't worry about it. Capital gains distributions are gains paid to you or credited to you by an account from mutual funds or real estate investment trusts. Shown on a 1099 DIV Box 2. We've already talked about that. If that's all I have going on, that's another thing. I could go straight to Schedule D, line 13, and report that in. That's the only thing I got going on. The IRS already knows about it. They understand where this number's coming from. Go on with my day. If both of those statements are true, do not enter capital gains on Schedule D, then I have to go back 1040 line 7, check the box that Schedule D was not required because these receive a special tax treatment. Tax to capital gains rates. Capital distribution, it's capital gains tax rates. Non-dividend distributions are a return of investment, your basis in the company. 1099 DIV Box 3, they're not taxed when you receive them, but are subtracted from the basis in remaining stock. They're buying you out. You were awarded shares, you put in your seed money, you got the equivalent amount of shares, now they're buying your shares back. And until they bought all your shares back, it's just a return of capital. It's a non-taxable transaction. Rarely see that.
Really.
Qualified dividends are ordinary dividends to be qualified to be taxed at capital gains rates. That's reported on 1099 DIV Box 1B. Those reported directly on 1040 line 3A. Because they qualify for special tax treatment, 1040 line 16 will not be figured using the tax tables. I can't. Because again, I have money that's being taxed at capital gains rates. I have to go through the worksheet. Part 3, Schedule D combines net short-term capital gain loss and net long-term capital gain or loss. If there's an overall loss, a capital loss is subject to loss limitations, like we said, basically $3,000. But it carries over. And one year, that's what George was relying on, is that he had a huge loss carryover that he knew he was playing with. So in his mind, he was kind of playing with house money. So he started looking for the shares that he could sell that would still be under that loss number.
Yeah.
Because he would have no income on that.
Yeah. Because he could use his carryover losses to offset his current year gain.
So he was looking for those shares. He focused in on those shares that year, knowing that you wouldn't have to pay tax on them. Meanwhile, he was doing this all from the comfort and climate of Greece. George Dimitriopoulos.
He's sitting on his balcony drinking ouzo, playing the stock market.
He was an old client of mine that was born in Greece in 1945.
Mm-hmm.
Came to the United States, got a degree in, engineering, I think, from Northern Iowa. Worked for John Deere until he retired, basically.
Repatriated, went back home.
He retired to Greece because his dollars went farther there.
And then moved back when his granddaughter?
No, it was his daughter.
His daughter went to college.
Because his wife was much younger than he was. But yeah. So when she became of age to go to college, he came back to the United States. That way they wouldn't have to pay international tuition. And then she ended up going to the American University in Athens anyway. So George has passed on now, but he does have some good stories that I can use. And he didn't mind me using them. If the overall loss is more than the $3,000 limit, the excess can be carried forward. Each year, the prior year's capital loss is netted with the current year's gains and losses, and the new carryover is figured until there's none. This is what George was counting on. But if I continue carrying on, kind of what they're doing is that they're going to retire my oldest cost first. So I'm always left with the newer carryover number. And once it's in short term, it stays in short term. Long term stays in long term. Here's our carryover worksheet. So this is one of those things. If I have a new client, I'm looking for it. I need to know if you have a capital loss carryover. I already kind of know because I looked at your 1040. If I see a Schedule D with a negative number at 3,000, I know you. I'm looking for this. I need it. I know you have it. But if I see capital transactions on Schedule D, I'm still looking for this because maybe you have a short-term loss that you're carrying over. I just need this. It's important to note that if the taxpayer and spouse file a joint return with a capital loss carryover, they are now filing separate returns. Any capital loss carryover from the joint return can only be deducted on the return of the spouse who had the loss. So if I look at George, and if he decided one year that he wanted to do a separate return from his wife, the capital loss carryover goes with him.
Mm-hmm.
Because his name was the one that was on all the accounts. A decedent's capital loss can be deducted only from the final income tax return of the decedent. The decedent's estate cannot deduct any carryover loss to future years.
Once you die, you get it one last time, and that's it.
Let's hope you can use it all up.
Any other carryover loss that you can't use after that final return is lost.
Yep, you don't get. This is one of those arguments for having a trust. Because if you had everything in a trust, then the trust continues on as the decedent. The capital loss transaction still exists.
And can still be taken year to year
Yeah.
at the trust level.
Right. If someone personally owes you money that you cannot collect, you may have a non-business bad debt. The amount you owe may be deducted in the year that the debt becomes worthless. To do so, there must have been a basis in the debt, meaning you have already included the amount in your income or loaned out in cash. The debt must also be worthless. There's no chance that you're going to get paid. And genuine, arising from a true debtor-creditor relationship based on a valid and enforceable obligation to repay. I just can't go up and say, well, Uncle George owed me $10,000. He died, and I know I'm not going to get it. My debt is worthless. That's not enough. It has to be genuine. There has to be an established relationship as a debtor-creditor. I need an IOU signed by George and me. Notarized would be better. Saying that I'm going to repay 10 grand by X day. Now I've got something I can write off. What are the chances of this happening? Not very much. But if somebody comes up and tells you that, well, here's what I need. I need an IOU. And I need to be assured that it's worthless. Well, how do I know that it's worthless? Well, it's here. Either George declared bankruptcy or George died.
Mm-hmm.
That's the only basically two ways that I know that it's worthless. Or if I have that date on there and I've reached it and I haven't been paid back yet. Although there might be some questions from the IRS about the date itself. Why did you arrive at that date? Why haven't you been paid back, especially if you're still around? Was there actual intent to ever pay it back?
Was this truly a loan, or was this a gift that you're now trying to write off as a loan?
Yeah.
I would have big questions if somebody came in and said, I've got $10,000 bad debt because I gave my son $10,000. He was supposed to pay it back by this date and hasn't.
Yeah. I would want more than that because I know the IRS would want more than that. They're not going to be satisfied with, well, my son didn't pay me back by Halloween this year and he was supposed to.
Yeah.
I want to see a written document saying.
Yeah, I'd like to see a notarized contract.
I
with
want
both
that, but even
signatures.
at that, I want to know what the enforcement levers were if he
If it
defaulted.
wasn't paid.
Yeah.
Bad debt deduction may only be taken the year the debt becomes worthless, and it's not necessary to wait until the debt is due to determine whether it's worthless. Like I said, if my debtor died and it's still not due for 2 more years, but I know I'm not going to get paid, I can write it off now. I don't have to wait 2 years.
Mhm.
Do not have to go to court if you can show that a judgment from a court would be uncollectible and as reasonable steps have been taken to collect the debt. And a receipt from Guido said, if you don't pay me back, I'm going to break your kneecaps. Well, I guess that's one way of trying to collect your debt. The bankruptcy of the debtor is generally good evidence. Yeah, I would say so.
You can't file bankruptcy on a personal loan.
No, but overall, a bankruptcy would be a reason why you, as the personal loan maker, could expect not to get paid back.
Yeah. If you loan me $10,000 and 6 months later I turn around and I file bankruptcy because I'm insolvent, I can't pay any of my debts. Even if we had a contract for that loan, you could turn around and say, well, Matt filed bankruptcy, he has no money, he just liquidated all of his debt. You could take that $10,000
As a loss.
as a loss, a bad debt loss on your tax return.
So do they need to show you proof that you filed bankruptcy?
Yeah, if a client came in like that, I would want to see the contract between the client and the person that they loaned the money to, and I would like to see a copy of the
Bankruptcy settlement.
bankruptcy settlement showing that debts have been wiped out. And it would really go far if my client is listed in that debt sheet as somebody that as a creditor.
Yeah, that would be indisputable proof.
Yes.
You told the court under oath, basically, that yeah, you owed your nephew $10,000.
Yep.
Stock splits. If you receive additional stock from a split, the basis of each share is split. Multiplying the adjusted basis of the old stock by the number of shares of the old stock divided by the number of shares of new stock. Well, let's just keep it simple. 2-for-1 stock split. If it's $50 for one share before, now I've got 2 shares at $25. My basis still hasn't changed though. I still have the same dollar value of shares. I just now have the double of the amount of shares
I went from 50 shares to 100 shares.
on a 2-for-1 split. Well, they're trying to make their stock affordable. That's why you declare a stock split. So you can have more people buying your shares.
You get up there where shares are $3,000 and $4,000 a piece. Not very many people can afford to buy a share for $4,000.
How many
Because-
shares can they have per entity?
There is a limit, yes. That's the reason why a stock market exists. That's the reason why a price is set, because there is a finite amount of shares.
Mm-hmm.
Yeah. You just can't say, well, I'm going to start, whoever wants a share, buy it. No, I'm going to release 10,000 shares.
Oh, okay.
So like maybe
Market cap.
10,000 people could purchase as many shares as possible.
Right.
No.
Well, yes and
People
no.
can purchase up to 10,000 shares. You got to remember, when you release
But then
shares,
how would that person not own 100% of the company?
It's possible. That's
be-
where you hear about takeovers. If I could buy 51% of the shares, now I'm in charge.
most companies will not release enough stock for 100% of their company.
Right.
If I have a company and my company's worth $1 million, okay, and I need some new investments because I need some more money coming in, and I've already got 15% of my company out at stock, have stock out so that 15% of my company is owned by shareholders, I can release another 10%, so I can release another 10,000 stock,
Shares.
10,000 shares for people to buy, But at the end of the day, only 25% of my company is owned. If I keep doing that, at some point,
You could lose control of the
somebody could end up with 51% of the shares of my company, and I'm no longer in control of my company. The person that has 51% of the shares is.
Wayne Enterprises.
Yes. Yeah. Where they kicked Rutger Hauer out of the boardroom.
Because Bruce Wayne bought all the shares through various organizations and companies.
Now, can they take over if they're not paid for?
If you own the shares, you own the shares. You
Yeah.
paid for them.
Yeah, you can't have shares without paying for them.
Yeah.
Well, I could short it, but that's a whole other transaction.
And then that's what the stock exchange is
That's exactly what it's for.
for. So they sell and barter on the same day, and then at close of day, it's whatever stock.
That was the closing price,
That was the closing
Is
price.
what sets.
and then the opening price should be relatively close to that number. There's some after-hours trading that's allowed, but
Especially if that company is on multiple exchanges.
right.
You know, if you have
Yeah,
a
I
big
can-
company like Microsoft, they might not only be just on the NASDAQ, they might be on the Nikkei in Japan. So when trading closes in New York, trading's opening in Japan.
Oh, because
Or they might be on the FTSE in London or the DAC in Berlin.
Yeah.
So
but it's the same stock that would have been here, but they're offering,
It's just in another country.
Yeah.
so they have different brokers for each one with the same information.
basically, yeah.
Yep.
So there's your finance course for today. Had nothing to do with taxes, though.
Well, to me it does, because if you don't understand it to begin with, you
I
don't
get it.
understand this.
Trust me, I get it. I just have the advantage that I do have a minor in finance to go along with my degree in economics and business administration.
Because I haven't had any stock type of anything since I was in high school.
Well, and now it used to be that your minimum transaction was I had to buy a share.
Yeah.
Now they've broken it down to the fractional. I could buy $50 worth of Microsoft. Well, that might only be 3/4 of a share, but I can do it.
We see that a lot with our Walmart clients. Our clients that come in that work for
Because
Walmart.
they're given stock in their
Right, and they'll come in with their 5498s, and it'll say that last year they got 0.00275 shares. This is what it was worth when they were giving it to them, because it's an employee stock option, and this is what this is how much total they own now, and this is what the total amount is worth.
Now, does Walmart buy that back if they?
No, the
The employee, they own those shares.
Well, what if
It's,
they get
it's
fired?
theirs.
They
it's
may
theirs.
not cash it out.
Oh, they did. That's what I was wondering.
They can hold it and collect dividends because they'll be eligible for their share of the dividends based on their stock holdings.
Because I didn't ever get anything like that when I worked at Walmart.
Well, it's part of a compensation package that they have now. Or they could go down to Merrill Lynch and say, I own this amount of shares in Walmart, I want to sell it.
Yep.
Stocks in crypto, there's a difference in fractional shares. Like you can have a bit of Bitcoin, right? And or is there like no way to maybe close that?
Let's just say that it's still kind of waters that are being charted out, but the simplest way of looking at it still is that crypto and stocks behave very similar when you sell it.
Yep.
The only time I have a fractional transaction is when I get rid of it.
I can buy $1 million worth of stock today if I have $1 million.
Yeah.
If
I
I
could
don't,
buy $1 million of Bitcoin today if I had $1 million. That's not a taxable event, by the way.
Nope.
This is my basis. I can hold it now for 20 years. That's not a taxable event either.
and I don't own
Well,
anything,
yeah, I'd be old, but
or I don't have any income tax that I owe on any of that.
yeah.
It's when I sell
Sell
it.
it. That's when I have to pay tax on it.
That's when the taxable event.
On the gain on the sale.
If I sell it for a loss,
then I'm limited to my loss deductions.
Yep.
Stock, crypto, yeah, any of those
Yeah, any of
mutual
that.
funds, all of that kind of behaves right now in the same way. And it goes even farther because the other way of looking at like crypto at the moment is, well, okay, it behaves in the same ways that if I was investing in foreign currency, if I was investing in gold, if I was investing in platinum. All of that, I have a basis, I have a sales price, there's a market for it, changes daily. All of those, all of that fits in the same umbrella. It behaves the same at the IRS.
So do you still get a 1099B?
If you're going through some places, so like I was doing Robinhood, which is known for being into that market, they will issue 1099Bs. There's some other places, like originally when I was getting
Robinhood issues a 1099B or just
You
an
have to-
8949?
No, a 1099B.
I've seen 1099.
Okay,
I've
because
I've
had-
seen the consolidated 1099B from Robinhood.
Okay,
And
because
they
I've
have
had
to print it off their app.
because I've had clients come in from that are on Robinhood or Coin Dump or something like those, and all they ever presented to us were 8949s.
Yeah.
I'd never seen a 1099B. from
I
them.
have.
Well, I always got two forms off Robinhood. I got one for the regular stocks and I one for the crypto.
Right.
Now this year should be different. If you're trading Bitcoin,
They have a new form,
you should get a 1099DA
digital asset.
for your trades on Bitcoin
That-
for this
that-
year.
That's a new form.
Yep, should get.
Like we said, the IRS is still trying to get their hand around it.
We will find out.
So this is something new. This is one of their steps to try and put a finger on what's going on.
So if you don't sell anything all year long, you don't have to.
You don't have to do anything.
Now, we do ask when a client comes in, we ask them, did you buy, sell, trade, receive as payment, or use as payment any digital currency? Bitcoin, Doge, Ethereum, anything like that. The IRS wants to know if you're purchasing it. They want to know if you're selling it, if you're using it to pay people, if you're using it to buy stuff. But if you buy it and you just stick it in the digital wallet and you hold on to it, there's no taxable event. You haven't sold anything. You haven't bought anything with it. You haven't paid anybody with it. There's no taxable event for digital currency.
Well, it's just like stock. There's no taxable event if I bought stock.
Right,
The only taxable event is when I sell it.
right.
Well, there's another taxable event if I get dividend, but
And
I'm not going to get a dividend from Bitcoin.
right. And digital currency is the only 1099B Schedule D 8949 item that the IRS wants to know whether or not you're dabbling in.
Because it's too new.
Well, when it first came out, you had too many people buying $50,000 worth of Bitcoin, and all of a sudden, the Bitcoin's worth $50 million, and they're turning around and buying jets and mansions and everything else, and the IRS is like, well, we
Where did
didn't
this come
claim
from?
any of that as income, and they're like, what income? Because they didn't know how to track it in the beginning.
Yeah.
And because they didn't have cash, what income? I have a house. I have a car. I have a jet. Well, what'd you buy it with? With Bitcoin.
So is it just a transfer of ownership? Yeah. Pretty much.
More or less.
Pretty much, yeah.
I mean, originally back in the day, Bitcoin was established that you'd write a computer program that mined Bitcoin, but basically what you were doing is more or less renting out your CPU space to somebody else, so they could do complicated transactions that just your regular computer couldn't do. But if I networked 100,000 computers together, I could make that calculation, and so that was the original idea.
And we had a lady sit in our office and explain it one day. And
Now, there's one year, you just take a picture of a QR code during the Super Bowl and you got some.
Yep. Well, that's the reason my 23-year-old airman 2 years ago turned around and spent $20,000 building a computer system to data mine Bitcoin.
I had heard of that, but I didn't want to follow it. What happened.
Wash sale is when a stock is sold at a loss and within 30 days before or after that transaction, the substantially identical stock is bought. Because the wash sale is not deductible, you just change your basis. Our day traders are guilty of this
Mm-hmm.
frequently.
But they know it's coming, though, like counting cards.
Well, it's
No,
also
it's-
listed on the 1099-B.
Wash sales are listed on 1099-B. This is true. But basically, the reason why, it's not that they were trying to do anything, it's just that, I'm a day trader. When I'm only in the stock market when I'm sitting at the computer watching things. Once I go to bed or once I get out. And then tomorrow I'll buy the same shares if I still believe in them. Well, that's a wash sale. But our day traders are the ones that are most guilty of this. It's not that they're trying to do anything wrong.
Is that the same as penny traders?
No. Penny trades I could leave for a long time. I don't care about. They're not volatile. Our day traders are volatile. They're trying to capitalize on micro gains. If it just went up 50 cents, well, it went up 50 cents. I think that's all it's going to do today. I'm going to sell, take my 50 cents
Per share.
per share, and then maybe it goes down 30 cents, so I'll buy back in because I think it should be back up at that other rate, and I'll keep doing that. That's a day trader for you.
Mm-hmm.
I'm not looking for the big score, although if I could, I'd take it.
Long run.
I'm playing the long game.
Have you ever done day trading?
Dabbled in a little bit, but again, you need to be on. If you're serious about day trading, that's your job. You don't just get up in the morning and say buy 5 shares of Microsoft and then go to work.
Yeah, you're sitting at that computer screen for 16 hours watching the market go like this and picking the spots where you want to sell and then picking the spots where you want to buy.
I mean, it's buy low, sell high, taken to its microscopic conclusion. I'm just moving on small moves because I'm not trying to look for the big one because those are hard to find.
Yeah.
It's lightning strikes. But I can take advantage of just regular market. It does this.
I'll buy shares for $1 a share at 8 o'clock in the morning. At 10 o'clock in the morning, that dollar worth of shares is up 25 cents. So I sell. At 11 o'clock, I look back. That $1.25 has dropped down to 75 cents. I turn around and rebuy at 75 cents.
Or add on?
Well, no, because I've sold it at $1.25. So
Yeah.
I turn around and I rebuy at 75 cents, figuring in a couple of hours it's going to be back up again. So if it goes back up from 75 cents back up to that dollar, I rebuy or I resell because, hey, it dropped
Yeah.
50 cents in a couple of hours. I look back in a couple of hours, it's back down to 30 cents. I
Where
rebuy
did you make
again.
any money, though?
You
Well,
made money.
You made money. You bought it.
I
At
bought
$1,
it at-
You sold it at $1.25.
I
So
made
you made
25
25 cents a share. I rebought it 75 cents, and I resold at a dollar. I just made another 25 cents a share.
Re-adding it, buying more.
You just keep you keep buying the same amount of stock and pocketing your everything over your basis. So if I'm buying 100 shares at $1 a share, and I sell that at $1.25, when it drops to 75 cents, I buy another 100 shares at 75 cents. And then when that goes back up to $1, I sell that at $1. And then when it drops down to 30 cents, I buy another 100 shares at 30 cents. And all of the differences between when I've bought and when I've sold, that's where I'm making my money. I may only make $15 a day on that stock. But if I'm doing that across 40 stocks, that's where your day traders are making their money.
I wouldn't want to try and keep up with that.
That's for those really financial, yeah, those guys that, in my opinion, went to frickin' Manhattan when they were 22, cashed out when they were 35, have nothing better to do, know how to run the market and sit at home and make $300,000 a year day trading. Because that's all they do. for 10 or 12 hours a day while the stock market is open.
Rules are different for people that buy contracts or options trade.
Oh God, let's not go down that.
Yeah, listen,
What'd she say?
Trading options.
Trading options is
Like
like,
holding the contracts and stuff for a certain amount of time.
yeah, that's like playing poker.
yeah.
And so let's not go down that road. I kind of did mention it back on Schedule A day because in that is some investment interest that I may be able to write off. And so I did talk about it a little bit back on Schedule A day, but yeah, in the sense of what we're talking about today, it doesn't really necessarily fit. I mean, yes, I could clean up and I would get a 1099-B. So yes, I mean it does fit, but that's at the core of that is just a stop transaction. The fact that I borrowed money from the broker to buy the shares because I thought, if I buy it now, if I buy this money now, I'm hedging my bet that it's either going to go up or down. So
And I can pay the broker back plus interest,
Yeah.
plus make money.
Yeah.
That's what I'm hedging.
yeah, it's really complicated, and you really don't want to mess with that. It's poker, it's blackjack, it's
There's some options.
well.
Yeah,
But there's different types of options too. So some are less complicated than others. But when you're getting down to it, I mean, really, you're betting that you know what the market's going to do in an hour from now.
and if he's doing it for a firm, he's backstopped.
Yeah.
He's playing with the firm's money, not his own. Because the firm's going to back any option trade that your son makes for a firm, the firm's going to backstop. If he makes the trade for a client, the client might lose money, but the firm's going to be backstopped on that. So the firm's going to lose a little bit, but the one who's going to lose the most is going to be the client, more than likely.
Yeah, because he's going to be the one that's going to be ponying up most of the money.
Yeah.
Some brokers do not subtract commissions and fees. They report gross proceeds as the sales price. Not as common. Other brokers do subtract commissions and fees and report the net proceeds as the sales price. And this is where you get that big thing, and I've seen some advertisements where it's like Fidelity right now, you can do some zero fee stock
Right.
transaction.
Yeah.
Well, then, it doesn't affect my basis. But if I'm paying commission, my basis has changed. I didn't really buy it for $25. I paid, in effect, paid $30 because I had the $5 commission. And the same goes around when I sell it. I sold it for $30 and might have only made $25 because of another $5 commission.
Oh yeah, but typically the commission comes off of the proceeds.
Typically, yes.
So when you buy it, there's no commission, but when they sell it,
There's a commission.
they get
But
a commission on the
There could be a commission going both ways.
Yeah.
I'm not saying it's out of the possibility. Let's hope that net proceeds are reported. That way the brokerage house has already included all those fees in your transaction.
Typically on the 1099-B, it'll say.
Typically on the 1099-B, they've done it. So we've talked about this, so I think I'll kind of, in the instance of, we got 20 minutes. Already talked about this.
Yeah. And the exclusion amount.
And we already talked about that, thanks to Matt.
Yeah.
He might have heard this class a few times, so. Oh, this is a good example, though. So, when I was talking about using our columns here to make adjustments, telling the IRS why I don't owe as much in tax as you think I do. I'm going to take in this case, $250,000 because she's a single person, the $250,000 exemption on the sale of my house. So instead of having a healthy, almost $300,000 gain, I only have a $100,000 gain that I'm going to pay tax on. And for most of our people, hell, the $500,000 or the $250,000 is going to cover what they sold it for.
Mm-hmm.
Most of our clients, hell, by the time I get done with the exclusion, that number's zero.
Yep.
Items deductible on the settlement sheets. I want those settlement sheets because I want to find all of these fees. Basically, if I could find a fee and it says it's a fee and it's in the column of my clients, I get to write it off.
Yep.
Or include it in my basis, I should say. Or in this case, my adjusted basis. As I'm adjusting the basis.
Fees, commissions, all of that added to the basis of the house, and then you can subtract all of that from
Right.
what the house sells for.
But pay attention to your columns. Remember, there's two columns because one's for the buyer, one's for the seller.
Yeah.
And sometimes it's split evenly between the two. What the hell? Stuff that I can't write off are obvious things. Insurance premiums, rent for the occupancy of the house before you closed it, charges for utilities or other services related to occupancy of the house before closing, or fees for refinancing a mortgage. I might actually be able to, depending, I might, if it's interest, I might be able to write it off to somewhere else. But none of those things. That's here. Mortgage insurance premiums, loan assumption fees, cost of a credit report, fee for appraisal by the lender, points. Not all of those are deductible. Not all of those are basis transactions. Points are interest. That's Schedule A.
And it'll be listed on your 1098.
Right. Mortgage insurance premiums. Another deductible on Schedule A, reported on 1098.
Yes. I hate those.
Yeah, I'm not really going to talk about it because I'm not.
That's not something we
It's not something
deal
we
with.
deal with.
It'll be on the test.
No.
1231 gains, probably not.
No. It might be if you took the level 2 test. On a level 1 test, no. If you dispose of a depreciable or amortizable property at a gain, you may have to treat all or part of the gain as ordinary income. Fortunately for my client, he was able to treat it as a capital transaction when he sold his house. Otherwise, he'd owe that 15% capital gain now is going to be taxed at 36% and 32%. Yeah, no. Not worried about this section here.
1245 property.
Yeah. Which is most of what you're dealing with anyway.
Well, most of your 1245 property is going to be more along the lines of a Schedule C return where a client
Right.
has sold his old truck, his old landscaping truck. He's got 5 of them. And he turns around and he sells them instead of using them as a trade-in.
Yeah, instead of taking the trade in, he called Carvana.
Yeah. And he got a check for him. And then took the check down to the dealership to buy 5 brand new landscaping trucks. And used the checks that he got from Carvana or whatever, the auto auction, whatever, as his down payment on 5 new trucks.
All right, so up to now we've been talking basically about personal transactions. 1099B, 1099-DIV, 1099-S. For the most part, those are forms that are going to be involved with personal transactions, except for maybe the 1099-S when I have a landlord and he sold one of his properties. If he did that, then I'm here. 4797, sale of business property. Although, again, this is more for your Schedule C, your Schedule F person than it is of your Schedule E because he's not in business.
you could put for Schedule E, if you put it on a 4797, there wouldn't really necessarily be anything wrong with it
No.
because it fills out just about the same as an 8949 or a Schedule D.
Right.
But
It's a bit of a shortcut.
I would say if you've got somebody who's renting a lot of houses and on your Schedule E stuff where you've listed the property, if you've marked on that Schedule E where you've listed their property that they are running this as a business, I would do this.
Yeah.
If you don't mark that they're doing this activity as a business, then you could just do the 8949 Schedule D route.
So this is a report the sale or exchange of real property used in trade or business, depreciable and amortizable tangible property used in trade or business. I'm selling it. I'm disposing of it.
Mm-hmm.
I'm using this form to tell the IRS what's going on. So part 1 is 1231 gains that go to Schedule D. Which again, we're getting complicated into section 1231, 1245, 1250. It's finite stuff that we don't really have to pay a lot of attention to in this setting.
Mm-hmm.
It just confuses the hell out of everybody. Ordinary gains and losses are part 2. Ordinary income from depreciation. Can carry part 2 of 4797 ordinary gain. Part 1 is 1231 gain, unless you're getting rid of it because it was stolen.
Yes. Yeah. If you're listing it as a gain if you're listing it as a loss because it was stolen and that's the reason it's out of service or no longer being used as a business asset.
4797 is your friend.
Yes.
And thanks to, we've already covered this.
Virtual currency. Hey.
I knew it was coming. Virtual currency is a digital representation of value that functions as a medium of exchange. Something that exists but doesn't exist, has value but nobody has any reason why. Why does it have value? I have no flipping idea.
Somebody made it valuable.
Somebody,
Valuable worldwide.
Somebody said,
yeah, but why?
You don't even have to transfer the currency or.
I know, but what makes it valuable? When I pull out $1, that's what makes it valuable. It has the backing of the United States government. If I pull out a bond from 3M, that's what makes it valuable. It has the backing of 3M.
Wait a minute. So, how do you have different currencies in other countries, like 50 cents to $1 in Mexico, et cetera, Chinese yen?
Yeah.
Digital currency is the same amount everywhere?
Yes.
Yes.
Yes. The
But that's it?
individual country currencies, the value of the currency is based off of the amount of capital backing that currency for each country. So the United States, if we have $1 trillion in currency out there, ultimately we should have $1 trillion in something to back that currency, whether it's gold, silver, platinum, whatever, our marketing, whatever. We have the money, we have that amount to back the amount of currency we have out there. The less we have, the lower the price of the dollar goes. The more we have, the higher the price of the dollar goes. Same thing with other countries. If our dollar is backed at $1 trillion and Mexican peso is backed at 10 million, well, it takes a lot more peso to equal what our dollar's worth. So that's why when you go to Mexico and you give them $100 and you get 10,000 peso to spend, that's the exchange rate. It's based off. It's not based off of this is what currency is worth. Period. Everybody's currency is worth this. It's depending upon what the country can back.
Right.
So I'd be saving money if I bought like a brand new Camaro in Mexico than I would have bought it here. But
You
I
might.
would-
You might, until you have to pay import tax and tariffs to bring that item from that foreign country into the United States.
Now you're paying the tariff.
Servicemen used to do that with European cars. They'd go to Germany, they'd buy a Mercedes in Germany for what would have amounted to $8,000 US in German Deutschmarks,
And then have it shipped.
and then have it shipped over. Well, when they had it shipped over, their import tariffs and everything else, they had another $20,000. Now, $28,000 for a top-of-the-line Mercedes is a steal because you'd have to pay 50 or 60 for it in the United States. But you're still paying a tariff to bring it into the country. So it's not like you can go down there and buy a car for $5,000 and just drive it across the border. Because at some point, even if you did, at some point you've got to go register that car in the United States.
Yeah.
And they're going to want to know where you bought it.
But the point of the point of the whole thing is that when you talk about currency, when you talk about real currency,
Mm-hmm.
it's backed by something.
Right.
It's backed by this government, that government, whatever government you're talking about. Tokyo's back in the yen, China's back in the yuan, you know, Australia's back in the Australian dollar. There's something behind it. There's value in it. I know that as long as there's this country, this money's worth something. And it trades daily just like stock markets. Maybe not quite as volatile, but it still trades.
That's what everybody's been up in arms. You've seen on TikTok, whatnot, about the United States sending $20 billion to Argentina. We didn't send them $20 billion. We bought $20 billion worth of their currency. We've done a currency exchange. They've sent us their peso. We've sent them $20 billion. Now they have to pay that back to get their peso back. They have to pay that back with interest to us in order to get what they gave us back. So it's not just
No
we
way.
gave them money, we did what's called a currency swap. And we do it all the time, all across the world.
It
We
happens
buy,
every day.
we buy different currencies from countries, so countries have the ability to purchase other things. It's no different than going to the bank and getting a loan.
The problem with virtual currency, there's no backing on it. You can't go up to a company, you can't go up to a country and say, well, here's my Bitcoin. I want to guarantee that it will always be worth something. It can be worthless tomorrow. I have no idea what the basis of the value is, except that somebody somewhere said this is worth $10,000. Based on what? Based on what? We have no idea.
Based on how long the blockchain for that specific piece of code that you just purchased is.
So it's not considered legal tender in any jurisdiction, but has an equivalent value in real currency. I can't use Bitcoin to pay my IRS tax bill.
Well, damn it.
I could use Bitcoin to buy a Tesla. Or at least I used to be able to. I don't know if I still could now.
I think you still can.
I still think you can, but that's not the point. Virtual currency is treated as property for federal tax purposes. So if virtual currency is received as payment for goods and service, the fair market value of the virtual currency is includable in gross income. So if I'm a Schedule C guy and I took payment in Bitcoin, I have to report the equivalent of that in US dollars on my Schedule C as income.
On the day you received it.
Yeah, of what it was worth on the day I received it. Fair market value of the virtual currency is its fair market value on the date of the receipt. If the virtual currency is listed on an exchange, its fair market value is determined by converting into US dollars. Obviously, the IRS does not care about what it was worth in Canadian loonies. They want to know what it's worth in US dollars. Transactions must be reported in US dollars.
And hopefully the 1099 DA will take care of all of that from now on.
Yeah, we'll wait and see on that.
Yeah.
All right, so we had fun for today. learned lots of things. It's a terrible chapter.
So who sends out the 1099 DA?
Robin Hood, for instance.
Yeah.
Okay.
Whoever
Merrill
whoever
Lynch,
I knew that.
whoever you're trading
Edward
Bitcoin
Jones.
through.
Yeah, whoever you're trading
What-
Just
what-
the bit.
yeah, whatever service you're using for Bitcoin transaction, whoever you're buying it, selling it, whatever, trading it through, should send you a 1099 DA. Keep in mind, if you only buy it and you don't sell it, you just buy it and stick it in your digital wallet, you're not going to get a 1099 DA. You haven't sold anything yet.
DA, digital asset.
At best, and I say this guardedly, at best, you might get a 5498 that shows the fair market value of that Bitcoin account. That's not a taxable event, that's an information document. That's so you know that at the last day of the year, your Bitcoin account was worth X dollars. That's all that says. And that doesn't have to be included in your tax return. That's just whatever brokerage firm you're running with, letting you know that your Bitcoin account is worth this, and it's letting the IRS know, hey, her Bitcoin account is worth this. If you were to sell something, that's when the 1099 generates.